Good morning. Good morning, everyone, and welcome to day two of GTFS, Global Trade Facilitation Summit, here in the beautiful auditorium of Dubai Chambers. So we'll be starting actually in 2 minutes and 27 seconds. So you can set your watch, fasten your safety belts, because we take off in 2 minutes and 23 seconds. So please, those who are coming in, and great to see you all coming in, move down a little bit. Yeah, closer. I think we will. You'll be more comfortable. Actually, I have a little secret to tell you. It is that the seats up here at the front, these are economy seats at the back, okay? Just so you guys know. These are the business class seats, okay? And here in the front two rows, we have the first class seats. And as a special concession from O'Brien Airlines, okay, everyone has been upgraded for business class. So you can all come forward and take the business class seats. Yeah, okay. Not the first class seat, okay? Just the business class seats, just so everybody coming forward. So I will leave the stage for 2 minutes, but in about 2 minutes we will be starting the proceedings. And I'm going to adjust the program today back by about 15 minutes. And the reason is, we're going to cover everything, but so many people really are enjoying the networking following. They get energized by the very good discussion. So we were going to be a little bit more flexible in the program, but we'll still be completely finished and wrapped up by 5 o'clock. So you have time to get ready for the gala dinner, which will be at 7 o'clock. But the logistics on everything will be shared with you a little bit later. So I'll be back on stage in 1 minute, 21 seconds. Well, good morning, everyone, and now we're actually starting, but I have a little complaint I want to make, and the complaint I want to make is somebody stole my bell. You know my bell I ring to get everyone back in the room? Somebody stole my bell, and I think I know who it was. And just to let you know, I will be coming for you later on today. Oh, he's moving now. Okay. Okay, everyone. Good morning and welcome to the Global Trade Facilitation Summit, day number 2. Day number 2 of our second time having this event. Yesterday, I think we had a really good day. And just to say a few words about it, I really appreciated the words of the director, Mohammed bin Suleiman, when he opened the event. He said something that was really what this event is all about. He said that he appreciated at our last event the amount of dialogue, discussion, agreement, disagreement, okay, and then consensus between the parties. So he liked the agreement, disagreement in an open manner in a very professional and friendly way. And his words were the way it ought to be. Because too many times at too many conferences, everyone is singing the same line in harmony, but we don't achieve anything. So it's good to have dialogue and actually discussion. So even at the end of the day, our guest from China, he introduced some Chinese Kung Fu. So we were really getting down into the physical activity. Our day yesterday started with something really important with the multilateral development banks. And I won't go through everything, but there was one or two key messages. One of the multilateral development banks increased their supports, which are enormous, by 30% in the last year. Okay, covering risks in emerging markets. Another one increased their their supports for trade by 50%. So despite not just the amount of trade that they're covering, but they're like a tipping point. They are like the spearhead, because when they cover risk in emerging markets, commercial banks follow. So the positive impact is absolutely incredible. We had a briefing on the UAE by Nadia Abdulaziz, our director, board member, and also chair of the ICC UAE Trade Facilitation Commission. And we had a comment coming in online on the chat that Nadia Abdulaziz is a walking encyclopedia of information on the United Arab Emirates and the region. So congratulations, Nadia. You did a wonderful job. And then, of course, we moved on with the discussion. We looked at Africa, the final frontier. And then we had to look at the role of the UAE Bank Federation in making Dubai, transforming it into a trade finance hub. Then in the afternoon, we had a panel that really enlightened everyone, and that was regarding sustainability. Not sustainability, it was regarding supply chain finance, okay, the corporate perspective. In fact, one of the bankers here said to me at the coffee break afterwards, the corporates were a little bit hard on the banks. And I said, that's a good idea, okay? So this is the idea. It's good to have a little bit of debate, discussion, a little bit of heat, a little bit of friction, but all done in a friendly, open environment. So then we moved on to sustainability, and now we are here today, and we're going to start off with a very, very important panel in just 30 seconds, and then we're going to move on to a highlight after this panel, which will be Trade Tech Transformation, the ICC UAE Trade Technology Transformation Competition or Challenge, where we have 4 competitors. But right now, as we say, ladies first. So we're going to start with the ladies first, and Betul, Fatima, and Sue can join me on stage. We're just going to have a little conversation about the role of women champions in trade, pioneering and pushing the boundaries forward. You're very, very welcome. Please.
Thank you.
So welcome everyone to this first and maybe foremost panel session. And I'll move forward a little bit so I can see you, but so you can see me, I think, is more important, you know? Okay. So We're looking at women champions in trade, and what we're doing is we're acknowledging and we're taking notice of the important role women are playing in trade. Not just they're playing, but increasingly playing in trade. Because going back in time, it really was a male-dominated business environment. But this is actually changing. So we thought we would just have a little chat with some women champions in trade and just get a little bit of insights on their background, what they're doing, and what they see maybe is going to be coming down the road. So I have Betul, Fatima, and Sue. So you're very, very, very welcome.
Thank you very much.
Good.
Thank you, Vincent. With this energy, I hope we will reflect your energy also to the audience.
Okay, good. Good. I think our energy is going to be in harmony. Well, I'm fingers crossed. So actually, Betul, let's just start with you. So Betul is the Regional Director for Factors Chain International. And as we heard yesterday, factoring is the fastest growing form of trade finance at the moment. So I guess that makes it a little bit exciting. And I learned from you that actually I've met these ladies through the International Chamber of Commerce. So this is another really important role of networking and building relationships, facilitating trade that you get through being involved with the ICC. But Betul, back to you. In the factoring environment, how long have you been involved in factoring?
It's quite long. I started my career in a consultancy firm, Anderson Consulting. It was 1992, and then unfortunately,
when you were 7 years old,
it's
I think.
yeah, it's just thank you. But they closed their operations. They decided to close their operations in Turkey. Then one of my friends introduced me factoring company in Turkey. They were the first factoring company in Turkey. And factoring was so new. I even did not heard about the name. I didn't know
and now factoring in Turkey. Turkey is one of the model markets.
It is now. It's a very developed market today. So I started factoring. I worked in a bank. I work also in a non-bank financial institutions, and I also worked for a couple of years in the board of the Association of Turkey, which is very, very active in Turkey. Now it has been almost 30 years in my career. I joined FCI in 2019, but in this until FCI, I spent almost my career with a little bit. I have a leasing and insurance experience.
Yeah, you said it was interesting, but you know, at that tipping point, you know, in your career, why was it interesting to you?
Even because it is factoring is a product that's I think for the economies of the countries, it's very, very important because it is open account. Yesterday, the panel for the investment bank was very interesting, and also Rudolf mentioned the association's assistance for the structuring the healthy ecosystem of the every country, even developed or emerging countries, is very, very important.
Okay.
So SME financing is very important for our economies.
Okay. Sure.
So factoring, which means it's an open account.
Okay, and because time is short, I just want to go what I think are really important questions. Factoring supply chain is evolving in the Middle East and the UAE, but in my opinion, it's still at a low level, okay? We had wonderful case studies yesterday but from large corporates, but really it's at a low level. You know, and there was a change in regulation in the UAE. Maybe you can enlighten us about this.
There is a very, very important development in the UAE because UAE published its factoring law last year, December 2021. I think it's a very important development also for UAE and also for the region countries, because the region countries also, they are looking for the support for their SME market, and the law of the UAE is one of the model. It's a very good one. It describes all the rights and rights of the assignee and the assigner. Also, it covers the future receivable, which is very important for SME and important for the construction industry.
Okay, but the key question is, you know, we have implementation of law, and sometimes we have zero results. We have implementation of a law, and then sometimes the environment actually changed. Has there been an advancement since the implementation?
It is just very new. It's not that easy because, let's let's give an example from Turkey. The law, factoring law is also very good in Turkey. It's published in 2012, so it is, we need some time for the implementation. Okay. It's not easy for only 1 year because we need to educate all the, the trade finance people, clients, and also judges to understand them. So it is not that it's just we are in the phase of the implementation. Okay. This is the role of FCI also.
Okay. And I actually think the combination of the bankruptcy law, which is pretty new, and this factoring law definitely will have a huge impact on the development of supply chain finance, whether it's payables or receivables. Just a last word, because I don't know anything about it, is that I have seen on FCI conferences mention of Islamic factoring. So I guess this is a new innovation, and I'm sure to this audience here. So if you can just say a few words on what's happening there and where it's going.
Yeah, it is a new product of FCI. It's just the Council approved the product in 2018. Last year, we realized our first transaction within the Islamic financial institutions, transaction between the Islamic financial institutions and the non-Islamic ones on the export side under the two-factor system. Okay. It is, all members are working under the general rules of international factoring, and we are describing how they are going to do their transactions. There is no funding in our rules, so which means you can fund this transaction on an Islamic way or a conventional. So it is, the product itself is very Islamic.
Okay, that's really amazing. You've really.
But the number of the Islamic members under FCI is increasing. Our turnover is increasing under FCI two-factor system. So it is just, I was in Jeddah a couple of weeks ago, and after that I was in Oman. There's a huge need for the SME financing on the Islamic finance. So it is, I think that it will increase.
Well, you definitely qualify, as a woman champion of trade. No, really, you really do. So Fatima, if I can talk to you for a moment. Fatima is a board member of ICC UAE, and she's also vice chair of our Commission on Arbitration and Dispute Resolution, and a very dynamic personality within the ICC UAE. She looks very mild here, but I can tell you sometimes she is quite demanding. But that's good. That's what we need. So Fatima, tell me a little bit about your background and how you got involved with as a lawyer, because that, again, in the past, that is kind of, in this part of the world, a male-dominated.
Absolutely. Good morning, everyone, and thank you for the ICC UAE for this kind of invitation and to be included in such a stellar panel as well. My career towards law was not the most traditional, so I started actually in finance and commerce and commercial transactions, and for over 15 years I worked in supply chain, leading government and semi-government entities in that field. And as I was going through that, I started dealing with claims and disputes and variation orders and people demanding solutions and money, and it started piquing my interest towards
it sounds like you were enjoying this. It doesn't sound like a very enjoyable thing to me, but I think it captured your imagination.
I don't know why I'm usually gravitating towards problems, but maybe it's something within me, I don't know. But I find it very rewarding when you get into a resolution outside of a litigation.
Okay.
And I was able to successfully do that through my role in supply chain. But as I was getting and gaining more knowledge into that field, I transitioned into working in arbitration, mediation, and then decided fully to take on law and qualify as a lawyer, where I still very much advocate not only for enabling SMEs with important information on how to fortify their contracts and how to capacity build within their teams on how to read a contract, how to negotiate, how to do terms and conditions, but also avoiding disputes altogether.
Okay.
It is something absolutely doable through the mechanism of governance and corporate governance in a way that commercially makes sense. And having worked as the employer, I understand what power sometimes the employer has that forces the other party, which might feel like they have the lower hand in the negotiations sometimes because they want that business and they're looking forward to closing that deal. So just upskilling and capacity building within that field.
Okay. And, you know, in the past, arbitration was at a very low level in the UAE, but now it has really, I don't know the details, but maybe you can give us an insight. I think it is now becoming quite prominent, and it is an option now being chosen. Could you give us a picture on the development of it from your experience?
Absolutely. So arbitration in the beginning was only a few articles embedded within the civil code in the UAE. And it was always an option, but it was not really fully legislated in a way that will empower the UAE to be an arbitration-friendly country. And then in 2018, the arbitration federal law have been published and used in the UAE, where it really fortified the position of the country to be an arbitration-friendly jurisdiction. What does that mean? That means that this country is open for foreign investments. It's open for foreign companies to come here and establish, where the worries about domestic courts are subsided by having an alternative where they can keep their proceeding confidential. They can choose their judges, where they're sometimes subject matter experts, because the dispute is very nuanced or very technical, and be able to really compete within the worldwide trade and law environment. Dubai have been recently in the 2021 index issued by Queen Mary University, and they do an annual index. Dubai have been actually ranked at the 10th favorite seat worldwide to bring in any arbitration for foreign parties to use, and they see it as a very neutral and extremely arbitration-friendly jurisdiction.
That's really amazing in the top 10, because 10 years ago it wasn't really on the radar at all.
Not at all, yeah.
It wasn't there. It wasn't there. You know, just we have trade finance bankers here from so many different countries, and on the first day of our summit we did Trade Law and Compliance Conference, and we were dealing with dispute cases. And they were all legal cases, okay? So, you know, you hear the benefits of arbitration, and when you hear about that, it's much more cost-effective, and it's much better for getting an enforcement at the end of the day. Maybe you could highlight why, okay?
Absolutely. Now, there are several tools within the alternative dispute resolution ecosystem. Some of them are more collegial. People opt for it, but it's not really enforceable, such as mediation, expert determination, negotiations. Those are tools available to everyone, but the result of it, you cannot go and enforce it. Arbitration is the only tool that gives the parties equal power to a judgment issued by the court for them to actually go and enforce it by the power of the law, basically. So it is a very effective tool. The time scale here in the law, it states 6 months to issue a judgment, but it is extendable. It always depends on the complexity of the arbitration. And if you go through expedited arbitration in different organizations, or institutions for arbitration, such as the Dubai International Chamber of Commerce, ICC, the Saudi Arbitration Center, wherever you choose to go, they have expedited procedure for low-value disputes, and these are the bulk of the disputes.
They are, yeah.
It can finish within 1 month.
Wow.
And you get an enforceable judgment. You cannot appeal it, you cannot stall it, and it's just one and done.
Okay. So a kind of a tricky question is, you know, what about judgments externally where the counterparties are here? The enforcement history, just an insight in how it has been.
Absolutely. The UAE is one of the signatories of the New York Convention, and the New York Convention, most of the countries of the world who are active in trade and commerce are signatories to the New York Convention. This states that if a judgment is issued by a court in the UK, but the enforcement is in the UAE.
Yes.
People who are signatories to this convention can actually recognize that foreign award and enforce it within their local land and local jurisdiction.
And the history of this has been successful, satisfactory?
Absolutely. It
really?
has been consistently successful to enforce foreign awards in the UAE. A lot of it is actually published whenever there's a landmark judgment, foreign judgment that is enforced. It's usually published in the newspapers just to enhance and fortify the idea that yes, we are really applying the New York Convention and to give signals to the foreign market.
And then to the other question where, you know, it's often hard to get a straight answer, but you're a straight talker, so I think I'm going to get a straight answer today. You know, in this context of arbitration is much more cost effective than litigation. I know this is not an easy one, but I think you can handle it. You know?
I think you're walking me into a trap, Vincent. Okay, so I will give you the most lawyery answer I have, which is, it depends really. Simply because if it's a small value claim, then eventually it's going to be a low cost option for you because it will be more cost effective, more efficient. As I told you, sometimes within 30 days, if you're not going through expedited, it will be 6 months. It's better than going through, you know, first instance and then appeal and then, you know, all of that within the normal courts. That being said, very complex arbitrations, and this is something that have been discussed even in the legal industry, are becoming a little bit expensive and pricey. And it is not because of one factor, it's because of multiple factors. Some of them are the parties themselves, some of them are the nature of the arbitration, some of it due to the fact that you need so many experts and everything surrounding the ecosystem of the arbitration proceeding itself. So yes, it can get expensive. However, I think the price tag is paid in exchange of confidentiality.
And getting back to the gender issues, you know, has there been a shift? Because it was male predominantly going back a number of years, but I think that has actually changed. So are we seeing more and more ladies, women joining in the arbitration, or is this an illusion,
Well, my fellow panelist is laughing because she knows that this is another loaded question. Why are you doing this to me, Vincent, today? We're so early in the morning. Yes and no.
Well, usually you have the balance of power, but today I have.
Exactly. So there are huge efforts to make arbitration as diverse as possible. However, and this is saying it as you know, I'm a straight shooter, and I will say it as I see it. We sometimes fall in the trap where we go into arbitrations and all what we see is a panel of 3 white older gentlemen that are on the panel.
Don't be looking at me at this moment in time.
You asked the question, Vincent. But it's something that we need to actively manage because it is easy to slip. So it is not something that I would declare, yes, balance have been achieved, gender equality have been achieved in giving opportunity. We cannot remove our foot from the pedal as of yet. Because more times than not, I have to keep reminding people that, by the way, there are no women here. And usually I'll find myself the only woman. And I think the same thing goes with finance, same thing goes with supply chain. And it's not at the lower levels because the lower levels are usually the early entry points. And this is where we're attracting new talent, new generation women in the industry. It is as we progress and get into the higher positions, the bigger cases, that we see fewer and fewer and fewer women present. And I don't know if...
Well, I guess we're on a journey. We're heading in the right direction, but we need to just find a way to accelerate a little bit.
Absolutely.
A little bit more. Well, Fatima, you are a wonderful role model for anyone in the country or anywhere in the world in terms of being a champion of trade, a champion of what you believe in. So, Sue, you're number 3, so we have 2 champions in trade. Let's see, do you qualify? You know, that's the next big question. So, Sue, from DP World Financial Services, if you don't mind me asking, where are you from, actually? You know, it's hard to determine, you know?
I'm actually from Malaysia. And yeah, I came from an interracial product. My parents, my mother is Chinese and my dad is Indian. So as a result to that, I look how I look. Unfortunately, don't get offended if I can't speak any Indian because I try to, but I speak Chinese at home. And this is where I always caught people by surprise when they said, what are you, where are you from? Are you, you know, you look Indian, but you speak Chinese.
And you're a lawyer as well?
Yes, I'm trained as a lawyer. I practiced law for 3 years. And before I become an investigating officer for Securities Commission.
Become a what?
Investigating officer for Securities Commission Malaysia for 8 years before I joined the industry. So I started my career in the industry as a compliance in 2005 in Malaysia when we started to set up UBS Malaysia. And then 1 year after that, I went to join the group compliance in London. And ever since that, you know, my career journey has been taking me...
Well, give us a feeling for the geography of your career journey, if you don't mind, okay?
I don't mind at all. So I spent 2.5 years in London, financial crisis happened, went back to Malaysia, helped HSBC to set up HSBC Amanah, which is a very interesting role because I'm not only looking at regulatory compliance, I'm also responsible to ensure that we implement whatever fatwa that has been issued on the transaction. And then, you know, Qatar came calling and went back to investment banking. So I was with Q Invest for almost 4 years before I came to DIFC and settled in Dubai. And I've made Dubai my home right now.
Okay, so in DP World, trying to fast forward to your job, you know, in terms of managing compliance and fighting financial crime, etc. My perception is that your challenge in compliance in, let's say, the last 5 years, the graph has gone through the roof in the difficulty of doing it and managing. Would that be a fair comment?
Yes, that is a very fair comment. And I think even today, if, you know, we read the news, we look at what is happening to Credit Suisse, we are looking at what is happening to US financial, you know, system. We are looking at, you know, and then the question is that, oh, we used to have regulation, we are supposed to enforce it, and then we want to deregularize it, and then, you know, wanted to have a light touch enforcement. But it does not work that way because I think financial institutions has evolved and everybody should learn. I mean, I myself, throughout my career, experienced 3 financial crises. The 1998 Asian financial crisis, which we saw collapse of financial institutions. And I was quite fortunate at that time, I was with the regulatory authority. So I was involved in quite high profile investigation and I was looking at how corporate governance were being managed at that point of time. And yes, you do see male-dominated board members. And that has evolved substantially right now. You started to see women participation as well. And I think, I'm not saying that it is based on gender, but I think women are less compulsive compared to men. Men are more risk-taking people, whereas women are more risk-averse. So, you know, you kind of, when you are sitting in the board or you are sitting in certain committee, women play a role of which saying, hang on guys, can we take a break here? You know, let's sit down and reassess this situation and let's see how it goes. And the same thing goes with the entire compliance career that I have undertaken. I've seen the evolution. We previously were compliance, tick box, just check. But these days is more of how do you set up your system and control and making sure that your system and control relevant to your business. I think this is a very key message to people who are in compliance role.
I think so, and women have my own is better at multitasking.
Yes.
And compliance is a multitask environment. It's so many dimensions that are actually coming together.
It is. And I think there is no black and white in compliance.
Okay.
It's just like, being a lawyer, I think you would agree with me that, it's always arguable. And how do you actually manage your risk, and how do you mitigate all those risks, and putting the risk mitigants surrounding that situation?
Yeah. Well, that's a question I have here specifically, and it came up yesterday in the supply chain finance. The onboarding was so important, but people weren't too focused on it. So when you have a new client relationship, what do you do? How long does it take? Or how do you get it to a state that it's in the green, maybe not too green, but green isn't my natural color, so you got to answer this question.
Well, I always think that by default, a client, because a financial institution don't know them, so by default, it's always a high risk. Okay. Until you build a profile and you are being comfortable with your client. In terms of KYC, sometimes you cannot be too dogmatic in that process. Okay. You need to also think outside the box, because not everything in the KYC list is something that you will take. So being a compliance officer, MLRO, how much do you know a client, and how well does the financial institution know the client is extremely critical. So if I know you, Vince, let's say I know you 10 years ago, and I know what kind of business you have been carrying out, I'm more comfortable in onboarding you in spite of certain lack of documents.
Yeah, but in terms of that, a direct question. To be honest now, I know you about a month. So how would you categorize me, just looking at me now? Low risk or high risk?
I would put you as high risk, because I don't... I will put you as high risk because I don't know your trade pattern, I don't know your behavior, I don't know who you are interacting to. I don't know if you have any affiliation with any unsavory people. I'm just teasing you.
It didn't sound like she was kidding me. It didn't feel like she was kidding me.
But, I have to say that in terms of trade finance, and being in trade finance the last 1 year plus with DP World, I genuinely see, especially women in trades, their participation. The saddest part is that, there are still hesitation in terms of finance provider in providing finances to women, because women tend to run their business in a smaller scale or home-based scale. And as a result to that, they don't have the typical balance sheet, bookkeeping and whatnot. And as a result to that, financial institutions tend to shun them away. Okay. And this is where DP World play a very important role. Okay. In the sense that when, we have, if especially a client is also our logistical client, we have that profile. And we can draw the comfort from that to onboard the client. But they will still be high risk until we are very comfortable to...
That's very enlightening, because, DP World is so big, and we hear all of these big projects. So it's enlightening to hear, number one, focusing on the SMEs, and of course, inclusiveness of women. That's really, really wonderful. But I just want to have one final question, and then if we have a question from the audience, we'll take it. This is a big question, and we have about a minute. So, in terms of what could an SME do to make it easier to get approval in terms of compliance, because the problem is there. It's not going to go away. Yes. Maybe step by step they can start doing something just to make it easier.
I think relationship manager in financial institutions play a very important role in knowing who exactly their clients are. Yeah. There is a tendency of relationship manager bringing in business proposal, without even knowing the client, actually know the client, what the client is actually doing. Okay. And as a result to that, you tend to be more prejudiced towards, this guy is lack of documents and therefore I don't want to deal with them. Okay. Because compliance do not deal with the client. Yes. So relationship manager is essentially the intermediary. The bridge. Yep. They need to gather as much information as they can, and don't make stories up, because it has to be logical. And we can sense or we can smell that something is not right there. So, I will always encourage relationship manager to develop your relationship. Today, your bank may reject the client, but maybe in 6 months down the road, you'll start seeing, and I would say that again, not gender bias, but women are risk averse, and usually they do things because they take over a business due to their husband's demise, or because of necessity to continue with the family. So women are usually more genuine in doing their business, and I think we have to take a little bit more we should be more encouraging towards women entrepreneurs.
Okay.
Yeah.
I think you're right, and the point you made, to give a general, a neutral general comment, but supporting that is yesterday in terms of microfinance and the development banks giving lines of credit to what you'd say is high risk.
Yes.
When it's like a lifeline, they don't default.
Yes.
They do what they need to do to keep the relationship going.
Yes.
So yes, you definitely qualify as a woman champion in trade. Any pressing question? We have one question here from Deepesh, and then we'll move on to keep our schedule back on track. And could we get Deepesh a microphone here, over here? Wow, the wrong. There's, yeah. Great. So wonderful panel and wonderful open discussion. I really learned a lot in a very short period of time.
Thanks, Vincent. Deepesh Patel from Trade Finance Global, and thank you for putting on this particular panel discussion. Really important. We actually launched 100 women in trade at Trade Finance Global last week for Women's Day, and 6 women represented the MENA region. There are lots of men in this room, and the theme of International Women's Day was embrace equity. So question for the panel, what can men do to help promote gender diversity and equity in trade and trade finance?
Can I just say...
Please go ahead. Yes,
one quick word, and then... as men, women are a little bit always reluctant to ask. So reach out and find a mentee if you have capacity and the ability to mentor somebody. Mentorship have shaped my career. The men who mentored me were instrumental in teaching me how to properly network and how to build my career. The women who mentored me showed me what to do and not to do when starting a very male-dominated careers that I've worked in. So I think just seek out mentees when you can.
I would want to add to that is
Please.
that when I joined investigation department, I was the only female investigating officer. On the first day of joining, my boss says to me, I'm not going to give you a special treatment. So I think there is also another part that, which is good in a sense that I don't look at it in a negative way. I look at it in a positive way, to which I would then understand that if the man has to do this, I have to do the same too. So equal treatment.
Wonderful. You're not afraid of any competition, Sue. I can see that for sure. Yeah. So ladies and gentlemen, can we give our panel a round of applause? I think it was really amazing. Thank you so much. It was really a pleasure having this discussion. So, thank you, Fatima. That was great. So, ladies and gentlemen, our competitors should start getting a little bit closer to the stage so that they're ready to rock and roll. We're moving forward with the Trades Transformation Challenge. Show me what you've got. And the competitors don't need to get on stage yet, but they need to be ready to move quickly because they will be coming up here to sit in just a moment. The idea of the Trade Transformation Challenge is that we have 4 competitors. And the 4 competitors is, we've heard so many fintechs talk about this, talk about that, and we've seen so many big failures. But the key issue is here, what they present, is it going to make a difference? Is it going to work? Is the timing right? And do they have the capability to do what they're saying they're going to do, that they can talk the talk, but they can actually walk the walk? So our 4 competitors are just getting ready, and I tell you how it's going to work, the logistics of this, while they're getting ready to come on stage. Yeah, you can feel the tension rising already. The pressure is rising. The way it works is like this. We're going to have a 1-hour session, and now it's 4 minutes to 10, so we'll start at 10. We're going to finish at 11 for our coffee break for 30 minutes, so 10 until 11. So we've adjusted the program a little bit. But here how it goes. Each of the competitors, and the competitors should be listening as well, has 12 minutes from the time they start to present their solution or what they have to offer that's going to be trade transforming. When you come to 10 minutes, and we have a timer here that will start, give you your 12 minutes, but also when we come to 10 minutes, I will let you know you have 2 minutes left. And then when we come to 12, it's cut. Okay, then we have 3 judges, okay, and each of the 3 judges will ask 1 or 2 questions of the competitors immediately after they present. Just 1 or 2, keep it short, keep it sweet. And then we'll finish, we'll go for a coffee break, and then later on in the afternoon, we will have the identification of the winner of the ICC Trade Technology Challenge competition. So with that, I think, Habib, we can proceed, and we will have our competitors. I see Joel is here. I see Hashim is here. Is it? Yeah. Okay. Please come on stage. And Troy and Summit is here as well. Yeah. Oh, you're here, Summit. Great. Please come up and take a seat under your logo. If you've forgotten your logo, you're in big trouble, okay? Troy, good to see you. Yeah. So, we need our judges, and our contestants have no idea who the judges are, okay? And which is always adds a little bit to the tension. So our 4 gentlemen here have no clue in the world who our judges are, and I can see they're beginning to look a little bit stressed already. So seeing as you're getting stressed, I'm going to let you know that the judges who are going to come forward here are also champions in trade. So if they're champions in trade, it means the 3 gentlemen, the judges are 3 ladies, okay? So Anna Kaptaradze, can you please come up here? And Sue and Betul up here to the front, and that means we will get underway. So guys, you're in a lot of trouble here. We have a very experienced director of in trade finance that has worked in, that's Anna. And Betul, as we have seen, she's a champion, I think a warrior in trade, okay, as well, from FCI Regional Director. And we have Sue, who is a compliance and enforcement officer and investigator. So guys, you're in trouble, okay, just to let you know. So we're going to kick off with the first contestant, and Joel, I'll ask you to come to the podium and show us what you've got in your 12 minutes.
Okay.
Away you go.
Okay, thanks, Vin. First, quick introduction to China Systems. Will only take a minute. For those people that do not know us, China Systems, we're a trade and supply chain finance application and services provider. We're not a startup. We're live in more than 75 countries, more than 100 customers live globally, and 40 years of experience. Our mission statement is creating value today with a vision for tomorrow, and you're going to be seeing part of that vision today. First, let's take a step back. What are the basics of trade? If you take a dictionary and you find the definition of trade, you will find this is one definition you'll find. Trade refers to the exchange between parties of goods or services against money or money's equivalent. Very simply put, a buyer says, I want my goods. The supplier says, I want my money. That's the basics. That word exchange, how does that exchange take place? That's the key thing. Today, under traditional trade transactions, typically such exchange is driven by the movement of paper, documentary workflows. Our idea, our objective is to simplify this with a digital equivalent. Our overall strategic approach is, and the people that followed the session yesterday will remember this, we want to go for low friction. We don't want to reinvent something new if there are good products out there which need to be modified. So we want to optimize existing trade instruments. that means is we were not going to redefine workflows and operational procedures if we have to. We will retain them where possible and, of course, optimize where relevant. We want to reuse existing infrastructure as much as possible, not enforce new infrastructure. The same thing in terms of the triggers. In finance, there's a lot of triggers, the things that trigger the decisions by people to provide finance, to settle transactions. We want to automate these triggers, not replace them. In terms of system, what does that mean? We want our customers to be able to use the same system to process paper-based transactions and fully digital transactions. How are we going to achieve this? Like I said, we want to reuse as much as possible what we have. And we took a product called documentary collections. I know it's not the most sexy product out there. It's a product where volumes are in decline, having to do a lot with COVID, because it's a heavy paper-dependent product. Heavily paper-based, lengthy process. Depending on the geographical location of parties involved, it can take easily 2 to 3 weeks to get the documents to their final destination. The consequence is, by the use of those courier service, a very large carbon footprint. This is more or less what happens in, today, a paper-based process in a documentary collection. Since it's a post-shipment trade instrument, the process is kicked off by the exporter, who starts preparing his documents, collecting his documents from third parties, putting them into an envelope, giving an instruction to the bank to collect the documents via another bank. If he has a portal solution, that can assist him on generating that instruction, using templates, etc., uploading documents. So you can automate it to a certain extent. But what still happens, of course, is you can have up to 1 or 2 or 3 banks involved, which means that that paper flows, you could have 3 or 4 courier services involved to get the documents to their final destination, to achieve that exchange. Because if you go back to the definition, do not forget about the exchange between the 2 parties. That's why I want to highlight this. Those parties will be asking this, especially a supplier says, I want my money as quickly as possible. Why does it take so long? Is all of this really needed to achieve an exchange of goods against money? I've highlighted on purpose this thing at, let me get the, here, this part. This is where the exchange is taking place. This is the key part we need to achieve. Do we really need all of this? So, I'm going to be focusing on this part. This is the part where the importer sits in front of a bank. The bank says, I'm going to give you the documents, but you have to pay or sign a bill of exchange or issue a promissory note. That's where the exchange is taking place. So let's focus on that. We want to optimize this entire flow by really solving this exchange process. And we've created a digital handshake between the parties. How did we achieve the digital handshake? You need 2 things. You have goods and you got money. What is the best document in trade to control the transfer of ownership of goods? The bill of lading. We've talked about it already. A bill of lading, document of title, we can control the transfer of goods on the bill of lading. On the other side, financial commitment can be formalized through a bill of exchange or a promissory note. So that's the buyer's commitment. And we've got a bank in the middle who will be orchestrating this. So this is sort of in detail the flow, yeah, of what is taking place. I'm going to explain it very quickly. Let me keep an eye on the time where it is. Not too bad. So first of all, the solutions we are using from China System side. Customer Enterprise, the portal used by our client, the clients of the bank. The back office system, Eximbil's Enterprise, used to orchestrate the digital handshake. In terms of the color code, quickly an explanation about the colors. The white boxes have to do with where there's involvement of digital bill of exchange processing. The green box, there we've integrated with an EBL platform to handle the transfer of ownership of the goods. The orange box is automated events on the system. The 4th box, the blue box, is where the user has manual intervention. So if we start from the flow, it starts here. The exporter will be preparing his documents on our portal. He will create an instruction, and he can optionally request finance because he needs the money. If it's a term bill, he may want to get the money early, not wait for 60, 30, 90 days, whatever. He will also here, and that's the key thing, he does not have to generate that collection manually. Since we have integration with an EBL platform, we are sourcing the shipment data from the EBL platform to auto-generate already part of the collection, which needs to be completed with all sorts of instructions, but they're linked. Based on the shipper, because the exporter is equal to the shipper, we will display all bills of lading of this client. So he sent that instruction to the bank. The back office receives it. The bank verifies it. We'll also verify the EBL data and document. What the bank here does is they will be the party generating the digital bill of exchange. The bank is doing this for the client, but legally it needs to be signed by the drawer. So the bank is going to generate a notification to the exporter, the drawer, and actually ask him to sign. We'll generate an electronic signature to sign this digital bill of exchange. When he's done that, automatically our back office system will auto-generate the collection order. This is a digital collection order. So this will be pushed via email to the importer, but there's a secure URL inside this email which gives access to the importer. When he clicks on that link, he will be displayed a collection order. He can review all the data. The documents are accessible through hyperlinks embedded into the digital collection order. He can then accept this bill of exchange, this digital bill of exchange, and sign as the drawee. This is where the magic is happening, the handshake. I was talking about the exchange. We're solving this exchange thing here. So the moment that the buyer signs the digital bill of exchange, our system will automatically do a number of things. We will transfer via API the ownership of the bill of lading on the EBL platform to the buyer. So because he's made a financial commitment to pay, he gets access to the bill of lading. The second thing is, if the supplier has requested finance and he's marked as an auto-finance client, our system will auto-generate the finance transaction and credit the account of the supplier automatically. This is part of the flow, but the key thing here is where the bank has orchestrated this digital handshake. So it's a sort of contract whereby the parties actually get what they want. So this is what's happening at a high level on the processing flow. The objective, of course, is because you would ask, so what's the driver for the parties involved? The key drivers are mainly because we're doing things faster. How do you benefit from doing things faster? It's, of course, the liquidity. The supplier is interested in the liquidity. In a paper world, you would have to wait potentially 2 to 3 weeks to get that acceptance on the bill of exchange. This transaction, the people that will look at the actual demo, it takes me 20 minutes to do the whole thing. So what happens here is we're embedding receivables financing into this collection by financing that bill as soon as it's accepted by the buyer. So this digital optimization allows us to actually create instant liquidity for the supplier involved. So what does this achieve? It's a bit of a summary of what you've seen. We've turned a 2 to 3 weeks process into an intraday process. So to create an instant liquidity model. There's a significant reduction in manual effort. If you just think about the number of people that are involved in the handling of the paper on a documentary collection for a product which is actually revenue-wise quite low, it's enormous. And the banks do the same thing. If you've got a collecting bank and a presenting bank and a remitting bank, they'd be scanning the documents, all of them. So the cost of that is huge. So we're reducing the processes and the efforts, and of course, significant reduced carbon footprint. You don't have to use physical courier service 3 or 4 times to actually achieve what I explained at the beginning, create that exchange between buyer and supplier. You give me the goods, I give you the money. And we've used 2 powerful documents in trade to achieve that by creating a digital handshake.
2 minutes.
This development was also, just a side note, has also been, the ICC at UK at some point, who are currently working on this electronic trade documents bill, have asked vendors to provide cases. So there were hundreds of submissions, and we were one of the 7 cases selected globally with this development to be a prime example of how you can actually take existing trade functionality and bring it into the digital era. Because people know collections, they're not sexy, but here we bring them to the digital era. So if you want to see the full presentation of what I've just taken you to in a very fast way, even faster than I thought, because I thought it was going to be short of time, this barcode will give you access to the full video. So you will be seeing all the integration with the EBL platform, all the digital signatures, the integration in terms of the digital bill of exchange. Everything happens on the back office, not just the financing, but also the entire settlement part, the reconciliation part, the reversal of the liabilities, the invalidation of the bill of exchange, etc. An end-to-end flow. So this is not a concept. It's an existing development which is ready to be starting to use by banks that are either MLETR compliant or, like the UK, and Singapore have adopted an electronic trade documents bill. And I've got 30 seconds left. Amazing. Thank you very much. I'm ready for your questions.
Thank you very much, Joel. Really wonderful and very, very energized. But let's move to our judges. So Anna, if you would like to pose one or two questions of Joel, and here you are.
Thank you very much, Joel. Actually, I completely agree. Not a very sexy product, but there are the regions which still remain quite active in this business, so it will be very helpful for the regions, and maybe you make it sexier. Mm-hmm. On the other hand, my question is, we are talking about cross-border trade, yes. And here we are only talking about e-bills of lading. Yes. And also, we have involvement of collecting bank, remitting bank, importer, and exporter. Mm-hmm. So does this mean that it's limited to the countries where e-bill of lading is acceptable?
At this point, yes, because this concept is based on the use of two digital documents. Yeah. So to really achieve the digital handshake, you need digital on both ends. So yes, you have to be accepting e-bills of lading, but you have to know there was recently a press release. It was quite ambitious. DSCA, the Digital Shipping Container Shipping Association, has confirmed they want to go for 100% of e-bills of lading by, it was either 2030 or 2035. I think it was 2030. That's not long anymore. You should not wait to prepare for that.
Thank you. Mm-hmm. And referring to yesterday's panel, I think that technology providers are way ahead of the time and way ahead of the curve, and that's much needed, mm-hmm. Which could give the chance to collections to be alive, I think. Yeah.
That's the objective.
And another question would be, do you have already this product running somewhere as a test or as a pilot?
No, it's not live, but the solution, it's not a proof of concept. This has been fully tested integration-wise with the partners we have involved. We've used CargoX. Some people may know CargoX. CargoX is being used, for example, by Egypt. All the advanced cargo information of all imports into Egypt are, at least for EBLs at this point, but they will also go to airway bills and they will go to CMR. So all modes of transport, advanced cargo information is going to be logged into this system, which is used by NAFEDSA, the customs authorities in Egypt. So we have integrated with their EBL platform to achieve this. So there is currently no live banks on it, but we have a number of banks, especially the banks who are active in regions where jurisdictions are adopting, typically UK, Singapore. We're involved in a government initiative at this point in the UK with this, because there's a digital economy agreement in place, and there's one of the targets is the e-bill of lading. So I'm absolutely convinced that this is only a matter of time that this will happen. Releasing goods in a controlled way, that's what a supplier wants to do, because he has a problem now. He has to physically give the document to someone, he's losing control. With this, he's actually digitally holding control of the goods, and actually the bank is acting as the orchestrator to say, I'm going to release it the moment that a financial commitment is made by a buyer or by a collecting bank. Because in some cases, the remitting bank is going to say, well, I don't accept the credit standing of the buyer in order to finance the supplier. They may request the bill to be avalized by a collecting bank. So not live, but I'm absolutely convinced, no doubt, 100%, that this is a product which is going to evolve, and since it can be compliant with EURC, which is a very relevant matter.
Thank you. Stu told me that I can ask a third question.
Oh, okay, but we're going to run out of time.
Do I have to have a system, mm-hmm. And should I be a user of the system, China systems, in order to use the platform?
We are an application provider, so we do not run a network. Yeah? So we provide applications to banks to actually run their trade business. We are not hosting this system ourselves. So the bank uses its own ecosystem of corporates and correspondent banks to apply this. So if the banks want to do this, and they say, I believe in this, it is a way to do things much faster. Yes, they have to acquire the software to to do this, which is use our application. But the reality is we do not own this. This is open. We're not going to protect this. This is something which is good for the industry. I welcome all our competitors to offer the same functionality, because the more this type of thinking is distributed, the more the whole trading community will benefit. So we're not protective about this. This is something which is going to find its way into all back office systems at some point, without any doubt.
Wonderful. Now, Batul, over to you.
Thank you. I want to ask a very simple question, because, of course, in every conference, in seminars and summits, we are listening to the software solutions. But when we are coming to the real world, as I am representing the association, we have many members, financial institutions. Of course, the decision on investing the software is very, how can I say, there's no U-turn on this decision. When you start, it is very difficult to U-turn and change your decision. So what I'm hearing from most of our members, when they decide on one software, the common problem, what I'm hearing, is the unrealistic deadlines for the implementation of the systems. So it is very discouraging on the beginning of the investment when the deadlines are not fulfilled by the system provider. So what is your experience about this problem?
Yes. It is a challenge. I had a slide, but it's my presentation is gone. I had a hidden slide at the end because I expected a question like that, because it's a very valid remark. The thing is, I refer to what I said yesterday. The people that heard me on the panel yesterday, the smallest initiative, the smallest project fails if there is no proper alignment. Because what you're doing here, yes, the technology is the easy part of this. The biggest challenge is on the alignment of the parties involved at all levels. You have to do a legal alignment, you have to do an operational alignment, so you have to consider that. So if projects are delayed, the only thing I can control, or we as a company can control, is we are going to put the technology in the time that we promised to. The thing is, which is more important even than applying the technology, is to ensure you manage the expectations of the people involved, and especially the operational alignment, because you've got 4 parties. It doesn't need 2 to tango. It at least takes, well, 3 to 4 to 5 to tango in here. And this is you have to be honest up front. You have to spend significant time before you actually kick off the development. You have to invest time with the buyer, the supplier, ensure that there is no mismatch of expectation what each party has to do, what they have to do to get this through from an audit point of view in their organizations to be processing in this way. So, and honesty, yeah. And I think that's where we are quite straightforward in terms of how we communicate to our clients. I'm not a salesperson. I'm a product and operations guy. So I very well understand your question. So we need to spend a lot of time. If you're re-engineering, you're optimizing something, because I explained yesterday, there's impact on people. The systems is one thing, but there's thousands of people everywhere behind those systems, and you have to get buy-in from the people. And that's why we go, remember the low friction? Everyone, well, most trade people who know a documentary collection, the only thing we've done really is taken the paper out. The rest of the process, the system we use, the collection module that we use, is 100% the same system as the one that does the collections today. So everything they do is familiar. The entire flow, the acceptance stage, the settlement stage, the reconciliation, all the processes are the same. The only thing is it flows faster. You don't have to wait for courier service. The documents go straight onto a screen. For the rest, in fact, so it's mainly legal and operational alignment which needs to take place. Hope that sort of answers.
Yeah, one question, but a really good question. Okay, and Sue, over to you.
Yeah, again, I'm a compliance person, so the system and control issue come to play. I do understand that you are a developer, but when you're developing all this system, it is very business friendly and, you know, is very welcoming in today's world. However, you know, with the development that is going on, especially in the financial fraud front, how do you then mitigate those risks, and what are the possibility of your control functions in intervening the transaction from taking place?
Yeah, yes, thank you. Good question. A standard functionality, which we're not providing that functionality ourselves, but we're obviously integrating in terms of in compliance and KYC with other systems. So again there, whether a transaction hits our system in a paper-based, where it's scanned and data is extracted from pieces of paper, it still flows through the same compliance processes. So also there is consistency, because what happens today, banks acquire OCR document scanning software to extract data from documents. The advantage here is moving to electronic formats. If you would see the system, if you look at the system, we're extracting from the EBL system all the structured metadata from the EBL. So we know the vessel straight away, we know the shipper, we know all the information is already structured. We don't have to use any OCR software to extract this. We immediately feed this data into the system, so that the checking, actually, the quality of the data will be much higher than when it's paper extracted. Something which, of course, is relevant as well, because there's purely the data aspect, the parties. The parties as well, of course, because we're moving here to digital signatures. We're not checking stamps on physical pieces of paper anymore. So what, of course, is important in this kind of context is identification of parties involved. So, and we're using digital signatures. So it also means, of course, you actually do, in terms of your party identification, happens slightly different than we get a piece of paper coming in. It's immediately signed at the source. So the system that we're using to handle the signing of the, in this case, digital bills of exchange, but we can use it for other documents, promissory notes, anything. In terms of signatures, this is eIDAS compliant. So this is the European regulation for the use of digital signatures. The people that look at the demo, in this case, it's integrated with Signicat, but it can also be integrated with DocuSign, so, and with other electronic signature systems. Okay?
That's it, Sue? Wonderful.
Am I off the hook?
You're off the hook.
Thank you.
Wonderful, Joel, I really must say. Now we move on to our second competitor. So Troy, that's you. Troy is Wood, CEO and founder of Impel. So Troy, over to you.
Yeah, hello, thank you. Hello, everyone. My name is Troy Wood. I'm the CEO and founder of Impel. Hello to the esteemed panel of judges. Thank you for your service today. I'd like to give a special thank you to the ICC UAE and to Vincent and his team for allowing us to be a silver sponsor at this year's event. It's very important for us to be here, and thank you for the privilege. Trade is being digitized, and payments need to complement. With tougher business conditions, corporates are always looking to optimize and cut operating costs. We as an industry need to deliver 24/365. We can't be limited by cutoff times, weekends, and holidays. ISO 20022 compliance is inevitable, and the industry is shifting. Impel offers several solutions, although simple but very important and very relevant and vital to the trade industry. The status quo for making payments through banks or through corporates have a delayed model. It typically takes 1 to 3 days to receive a payment. You're limited on transaction times. It's a centralized model. It takes nostro vostro accounts, the central bank to settle up at the end of the day, and it can be at high cost. So there's some businesses out there that can't use the services of traditional providers, and we're here to change that. Impel offers 2 mechanisms to complement the system. First is our traditional, which supports just like SWIFT or SEPA, if you will. But you would still use nostro-vostro accounts. You would still use a central bank to settle up at the end of the day. However, we would have a lower operating cost using our service. We have an API solution that becomes a peer-to-peer model, a decentralized solution. So it'd be from entity to entity. We have a next generation solution that allows for instant settlement capability between two parties in a peer-to-peer platform. We leverage blockchain technology to add digital assets into our ISO 20022 API for instant settlement. Excuse me. We're homegrown in the US. We've recognized the benefits and all the wonderful activity here in the UAE, so we have transitioned. We just received our business license last month, and so we have fully relocated here to the US. And that being said, I would like to say that Impel also honors women in trade, and we're glad to have our Global Business Development Manager, Sarah McHale, which is in our audience today. She and I will both be at our stand at the back of the room. So if you have any questions, please come by and say hi to her and myself. Again, we are moving from a centralized model to a decentralized peer-to-peer model. Our ecosystem includes Impel, which we are the fintech providing the ISO 20022 API for payments and instant settlement, the payment rail, if you will. The blockchain network that we have chosen is the XTC network, which is a leader in the industry, is focused on trade finance. It's superior in its protocol for speed, efficiencies, security, and operating cost. Our solution partners include Fluent Finance, which they have a brand new stablecoin on the market, which will be better than anything that's on the market existing, which would be Tether or Circle. Trace Financial allows us to convert the older MT data types to the new MX XML type. The traditional model you can see is pretty complex, hence why it takes so much time to process payments. What you don't see on this chart is the use of nostro-vostro accounts, the use of the central bank. Our model changes that. Here we have a peer-to-peer. Even so it says bank to bank, it could indeed be corporate to corporate, leaving out the banks. So think about when you want to process payments 24 hours a day, 7 days a week, 365 days a year. You don't have to worry about cutoff times in the afternoon, nights, weekends, holidays. Some of you may be familiar with the ISO 20022 model that's being implemented. It was initially introduced 19 years ago in 2004, but as you might know, as well know that banks are slow to adoption. It's just now coming to, I don't want to say crisis, but the world is moving in that direction, and every entity that wants to be a player across the globe needs to have their systems use this model. Frictionless, cost-effective, and inclusive. So for the institutions that can't afford the traditional providers for payments, we're a great solution. For the entities that can afford the traditional providers, we provide a sound, secure, efficient, and cost-effective mechanism. Our software is live. Anyone in the world can come to our internet site at impel.global to do a self-paced demo. They could either add digital assets for instant settlement or not. You would be sending from a pretend bank A to a pretend bank B, a pretend customer's account to another pretend customer's account. You'll be able to see the transaction over the XDC network's mainnet in the block history, as well as do a deep dive in the XML code that it took to get there. We have a proprietary layer 2 security module that allows the data to get from point A to point B, so the private data stays private. Thank you very much.
Thank you very much, Troy. And in terms of time, you've done absolutely wonderfully. So to our first judge, again, Anna.
Thank you very much. My question, and I have many questions, and I know that I'm limited in time, but first of all, in today's world of KYC and AML, where I couldn't identify this part in the presentation, and very shortly, if you just...
Right. So it's business to business. So Impel would KYC the customer, the entities using our API. So entity in the peer-to-peer model would be KYC through Impel. But if it's a bank using our payment rails, then they would be doing the KYC to their customers. So we just provide the payment rails for the banks. For the corporates, we would KYC through us.
Okay, and technology-wise, you had on the presentation several options and connections, and then I saw Swift as well. So is it on the Swift rails, or is it?
It's our own rails.
Okay, so that's what I wanted to make sure that.
Right. So we have our own rails, and how we can use our next generation model is we use blockchain technology to add digital assets such as a stablecoin. Our strategic partner, Fluent Finance, has a US plus stablecoin, and they're working to bring an AE plus stablecoin to the region. So we can attach that in the messages payload for instant settlement. So corporates literally could use our API to tie into their back-end accounting systems, push the data through our API, attach the digital asset like a stablecoin in the messages payload for instant settlement. The receiving party, the API would also tie into their accounting back-end systems, and you could put the robust data in there to make sure there's no mishaps.
Just a question. Are you bypassing the financial institutions other than, they being the banker of their client?
I apologize, I didn't hear the first part.
Your system is a peer-to-peer, right?
That's
correct.
So,
it's like a corporate paying with the counter paying directly to the counterpart. And it is more or less bypassing the financial institutions. Am I right to say that?
Well, so we're working to have an inclusive model. And I've said from day one since we launched this company that we're not going to war with any providers out there. We're not going to war with SWIFT or SEPA or the like. There's plenty of opportunity around the world for all of us to be involved and work together and collaborate to make the businesses and people's lives better.
So I want to ask you that it is this transformation to investing in new technology for the payment or its software is as Vincent mentioned, we are always talking about the changes in technology, but it is we are giving more value on the digitalization part. But of course, it is also changing the culture of the companies. So how you prepare your clients for this cultural change, because it changes all the way of doing business of them.
That's right. It comes down to education, and we're there to hold their hand and to introduce them to the new technology, and it's step by step. Some people are ready today. Some people are already 6 months, a year down the road. Some people won't be ready for another 3 or 4 years. So we deal with everyone accordingly. That we come in contact with. Some people are a little bit more aggressive, a little bit more forward-thinking. But in essence, it comes down to education, and it takes time to work that out.
Thank you, Troy. That was great. Oh, please.
Excuse me.
Go ahead.
So allow me to say that some people say that money makes the world go around, and Impel is changing the way that money moves around the world. So we are working to make everyone's lives and businesses better. So please join us as we change the world for the better.
Oh, one more question. One more, sorry, one more.
So last slide was showing that the demo is available. Similar question to Joel. No, it's okay. So are you already live? Are you tested?
Yeah, so we're open to pilot programs around the world. So we'll be working aggressively here in the region, working over in ADGM and the sandbox with Hub 71 and those guys over there. So anyone that's interested, please come to our stand and we can talk about that.
Thank you, Troy. That was really good. So. Yeah, it's funny how everything is connected. So speaking of making money move around the world, our next presenter is Hashim Al-Husseini from Money Move, co-founder. And so Hashim, over to you.
Good morning, everyone. First of all, I was really freezing in here. Habib, do me something. I'm shaking, I swear. So which one shall I use to move here? Here. All right. Good morning, ladies and gentlemen. Very happy to see a lot of familiar faces and some old friends as well. My name is Hashim Al-Husseini. I'm the co-founder and managing director of Money Move. A lot of people think that when we say and they hear Money Move that it is regarding money. In fact, it's not. If you spell it, you see that money is from monitoring. Move is from the movements of the entire trading documentation cycle that we're tackling with governments, banks, buyer, seller, importer, exporters. So this is how we came up with this name with Deloitte back in 2018. We are introducing the next generation of trade, supply chain, but between two brackets, operational governance, because this is what we're coming up with. And this is what will distinguish Money Move compared to the amazing other competitors that is taking place today in the world. Allow me to start with saying that struggle and failure are the road to innovation. When I say this, we as founders came from the kitchen, from a real struggle and failure. Money Move was founded by Dr. Mansour Al-Husseini. He's my father, but he's my boss. And he's a very nasty boss, to be honest with you. And he has almost 45 years of experience in trade, finance, operation, with government, with private sector. Myself now almost 17 years of experience, started being a trade financer in HSBC, and we've seen what is the problem from a banking perspective. I've seen what is the 39 articles of LC, what is UCB 600, what is URC 522, and what are the problems and what are the loopholes taking place in trade finance. When I became an entrepreneur as a subcontractor in Saudi Arabia over the last 12 years, we've seen how we can manipulate with the LCs. We have seen how suppliers can play with the LCs. We've seen a lot of problems operationally. And from there, we came with the innovation, which is Money Move platform. I'll give you just a brief that we have 3 products or 3 modules, as we like to call it. The first module, which is the Trust Pact. Trust Pact is a local or domestic trade operational governance, bringing the governments, bringing banks, buyer, seller, and legal firms in one single ecosystem. And this is about to go live, inshallah, in Saudi Arabia and UAE in the coming couple of months. We've got already initial approvals. The second product that was dedicated from the serious and real experience that we had over the last 15 years in construction, a dedicated and first of its kind ecosystem for construction projects, where we bring the project owner, whether it's a government or real estate developer, his consultant, main contractors, subcontractors, banks, legal or logistic shippers as well, in one single ecosystem. And everything is fully blockchain enabled, 0 papers, 0 human interference, with full of visibility by the project owners and the banks to make factoring, reverse factoring, full of financing solutions. The product that I want to speak about today, which is the Credit Move. It's a combination between a solution to banks with credit insurance, which we are taking live now in UAE. We're glad to, we've announced it already. I'm glad to announce it today because last week the product is 100% ready and about to go live in the coming couple of weeks. It is the UAE Trade Finance Gateway. It's a project that is sponsored by Ministry of Economy in UAE, led by Ittihad Credit Insurance, and MoneyMove is the engine out of it. It's fully powered by MoneyMove. I'll speak about some numbers that you already know, but I like to say it because we want to remind ourselves with it. The SME in Saudi and UAE represent almost 95% of the businesses in UAE. They are almost now 400,000 SMEs, and the contribution for them is 52%, and 3 times higher than the global export hubs. It is huge numbers, and they are not getting the real finance that they need. I am one of them in UAE, in Saudi Arabia, as a contractor with our side businesses. If we come and speak about what are the challenges that these SMEs today are facing, which we already know, but I like to remind ourselves with these problems. Especially in UAE here, 20% of these SMEs have access to credit, only 20% out of 400,000 SMEs. 60 to 65% loan applications are being rejected. With all due respect to our dear bankers, you know this, but I really know why you are reluctant to finance them, because I used to be one of you, and we know how you see the SMEs are high-risk categorized companies. But this is why we came up with innovation, and this is why, as entrepreneurs, we have to bring solutions to banks. High interest rate between 14 to 25%. I know that banks don't like to hear this, but it is a fact. It varies down or up. 90% cannot opt for collateralized loans. And this is what we want to come and solve. So why all of these challenges are happening? It's the access. Banks are reluctant to lend the smaller borrowers. We respect this. We need to solve it. The process to obtain finance is cumbersome. And the awareness, there is a lack of awareness from the SMEs and what is the eligibility for them, what they can take. Is it factoring, reverse factoring, is it supply chain, or else? The time consuming, the lack of collaboration, and the higher pricing. We need to find a solution. Therefore, we came up with the innovation, which is MoneyMove platform, but in partnership with Ittihad Credit Insurance, to have the UAE Trade Finance Gateway, the first of its kind in the region. MoneyMove will be the platform for a single unified platform, creating an ecosystem enabling the UAE exporter, importer as first phase. Second phase, we will have local or domestic buyers and seller also to have credit insurance and to get finance. We are very happy to have our partner, Ittihad Credit Insurance, as a leading of this project, and the 4th banks that is already with us. And one of the very important points that we just discussed, I believe Batul spoke about it, that banks, and I believe you mentioned that it's very important to have everyone aligned from day one because of the development. And this is what we have done here. We've sat with the banks. We made a full BRD after the consultant handed over. We made sure that this is what they want. This is how we will start. This is how we will end up. Exact point of integration later on, and what is the manual that we'll start with. So to ensure that the implementation will take place accurately and on time. Also, we are now in the final discussion to have UAE Trade Connect, UTC. Why? We want to give the operational and credit risk mitigation to the banks and to ECI that all of the invoices will be checked, that it is not already financed. So UTC today, they are the invoice duplication verifiers, and we want to integrate with them to ensure to the banks that no invoices are already financed. Also, we have signed with SES, which everyone knows the world's largest goods and document verifier, to give another layer of operational governance and to mitigate the credit risk for ECI and banks, where they can ensure everything in terms of goods and documents. How it works simply, you will find that all of the exporters, SMEs, will register, whether they're exporter, importer, buyer, or seller. They will be checked via ECI in terms of the credit eligibility. full KYC, KYB will be integrated to the platform. You will see that invoice will be verified that it's not pre-invoiced before. Banks will give the approvals. SGS will ensure the goods and the documents as per the requirements by the importer and the seller, and shipment will take place. We are now in discussion with 2 of the leading shipping forwarders. We want to have them as preferred forwarders to give better prices for whoever will join the ecosystem as SMEs. So this way we will be making and creating the first of its kind ecosystem that is tangibly supporting SMEs, starting with exporter, going to importer, then to buyer and seller domestically. The goal is to have open account, and we digitize the open account, eliminating the LC, which is, I see that it's a bit costly and it has a lot of issues, and we have an end-to-end digitization process. That's why we say an end-to-end digitization and operational governance. And
2 minutes
very
left.
important things. Yes. So the Trade Finance Gateway benefits, as you can imagine, simply that we will have the digitization, the faster process, less risk for the credit insurance agencies, as well as banks, the ease of financing, SME support, and it's fully aligned with the UAE vision. Now, we're glad to, that we had already several awards. We've been selected by HSBC as one of the top 10 fintech companies in MENA region. We've been awarded by National Bank of Fujairah as the best digitization platform for the Murabaha process. We have a lot of things later on we can speak about it with the Islamic and FCI Batul, how we really are digitizing the Murabaha process in the Islamic financing. We did full API integration with Emirates MBD for the sandbox with the DIFC FinTech Hive. And 2 months back, we've been awarded as the best innovation for this project TFG by the Global Finance Award. أقول قولي هذا وأستغفر الله لي ولكم والغفور الرحيم, and thank you so much, and looking forward to have your questions.
Wonderful. On time, every time. Thank you. Anna.
Thank you. First question, you started with a very interesting data, not very promising, but there's a lot of room to the data. So the 20% of the SMEs are financed only by the banks, and the rest, the rejection rate was quite high.
Central Bank says this, not me.
Okay.
With references.
No, I trust you. So where do you see, if I understood the platform, how it works correctly, where do you see that the banks themselves who are onboarded would have more comfort financing within the platform rather than in a regular financing?
Banks today, they want to have collateralized transactions, right? So when you come and tell them, this is why they have already sent applications. We have approvals. They have shortlisted some of the customers. They said to ECI, if you insure them, we're going to finance them. So banks will send the customers either who wants to increase their credit limits, and banks did not have the appetite earlier. They will send them here, they will get collateralized, and they're going to finance them. Banks can have new category. Whoever they did not have the appetite to fund them today, they will come to the platform. ECI, as a federal agency, will collateralize their invoices. Banks are going to finance.
Yeah. So would this mean that this would be a substitute, your offer would be a substitute of a supply chain and open account as well?
No. It is because it is a supply chain and open account transaction. But what we did, Anna, is digitizing the process, bringing the entire, today, there is no ecosystem. Credit insurance are working in silo, banks
so
separately.
Credit insurance is your joker?
Sorry?
Having a credit insurance integrated?
Yes, this is the UAE Trade Finance Gateway, because our goal is, today banks are saying, we want a collateral. So Ittihad Credit Insurance, as the governmental agency, they're going to insure, banks will come, they're going to finance. So if the exporter did not, because banks are taking the recourse of exporter, and credit insurance agencies will be insuring the banks. not the exporter. So if the exporter did not pay, the government will pay back to the bank. This is what banks, I believe, they want. Correct me if I'm wrong, please. Bankers.
Are you saying that the credit risk in the event of default would shift to the government? And if
Yes.
you have any, do you have any commitment from a government?
Absolutely. It is, ECI is a governmental entity.
Yeah.
It's
okay.
a federal agency in UAE.
Yeah.
They take the risk underwriting.
What about private sector insurer, do you think?
Later on, we will bring, this is what we came from the top. Okay. So later on, we will invite other private credit agencies and tell them, please be our guests and insure. But today we want it because it's a governmental project sponsored by the Ministry of Economy and personally by His Excellency Dr. Thani Zuyudi, the Minister of Foreign Trade. So the goal is to give the credibility to banks that the government is insuring you. That's why banks are paying the premium to the government.
Okay.
In case the exporter did not pay, the government will pay back to the banks.
So right now, it works here because there is a commitment, a very firm commitment from the government. How do you see yourself in about 5 years' time expanding globally? You know, because you need a commitment from the government, and not every country are rich governments. So especially in, you know, like you have a lot of countries like Bangladesh, Myanmar, Southeast Asia, the government are not that, they wanted to help, but they don't, financially they are constrained by their ability to help. So how do you see your system moving towards that era?
This is one product, as I mentioned, and it will be replicated. Already we are in talks with other governments in the region. For example, FAB as the first bank, because it's the leading bank with us who started the project, they are now taking us to Saudi Arabia. We're going to Exim Bank. Exim Bank playing for the government, the same thing, but everyone is working manually in silos. So we're going and replicate. We spoke with the Nigerian government. We said, although they're not very rich, but they have a lot of exporters. They want to support the local export outside, but they want a mechanism. They did not think of such thing, and they need a solution. And instead of the government building something, we go and tell them, we are the partner, we have this project, come and replicate the same. So this is in terms of this product. The other products, I'll give you an example of UAE. I met with the Minister of Justice a couple of months back, and they said in domestic trade in UAE, it's more than 200 billion. And it has a lot of commercial dispute locally. There, we're going to bring for the first time an ecosystem, Ministry of Justice, Ministry of Trade, all of the companies, KYC, KYB, buyer, seller, agreements, all of the trading documentation, blockchain enabled, and we go plug and play with them. So we will digitize this. Every government today needs this, globally. So this is why today Deloitte made the valuation to MoneyMove as $2.4 billion company, and we're still in our early stage as a baby. Thanks, God. Batul has a question, sir.
Last question.
Please.
Hashim, as far as I understood from the system that you are securing, from the perspective of a bank, if I'm a bank, I'm coming to you for the SMEs, I have a security credit guarantee from the insurance, and also you are using the invoice recording system to control the invoices, is double invoicing, or is the invoices real or not. But how about the SME's performance itself? Of course, there will be some part of the SMEs that the insurance company will also not secure.
Of course.
So do you have kind of a AI system to rating these SMEs to provide this information for a bank? If I'm a bank, can I trust your data to lend those SMEs?
Good question. For this reason, banks recommended that we start first phase with their recommended list of customers. So this is why banks now are pushing customers to ECI, and they're saying, let's pilot with these people so we can see the mechanism. You know, AI, we cannot have it without data. So we will start fetching all of these data. Later on, we will have these data, and it will have a routing engine and machine learning leveraging the AI. We will now integrate with the credit bureau. Today, we are integrating with a company for KYC, KYB, who will give ratings for the exporters and importers. ECI today, they have their own eligibility criteria. So ECI, before they say, we are taking the risk, they made their own KYC, KYB, and they know the performance of this SME. What they're doing, ECI, by the way, they have more than 300 million companies' data. Massive. So this is what they're doing. If they pass the SME, it will come to the bank will give the approval, and it will proceed. So it is the credit insurance agency responsibility to do this, and banks, then they will make their own KYC as well. So they will definitely make sure, and you know, credit insurance and banks, they will definitely take care of this before going forward.
Well, Hashim, thank you for a wonderful performance.
Thanks
Could we
so
give
much.
him a round of applause? And now we move on, and it's last but not least, our fourth competitor, and Summit Roy, founder and CMO Trade Assets. So Summit, over to you.
Thank you, Vin. Much appreciated. So good morning to everyone. I feel this bit of deja vu. This is a sort of a continuation of the similar challenge that we had last year at the summit. So I feel like I should recap a little bit at the beginning what we talked about last year. Because if you will, if you go towards the end of the presentation, I end up talking a lot more about the concept. So we talk a lot more about why we are, and a bit less about what we are. But it's important to understand, I think, the concept of trade assets, why we created it, and then it all makes sense. So the product is way beyond technology. It's about really the way the industry itself, the banking industry, interacts with each other. So quickly, bridging the gap. So here we're talking about a bridge. Obviously, you see a container ship over here. There is a correlation. I think the bridge we're talking about actually helps to make trade happen, and make trade happen in places where it actually is constricted for various reasons, which we'll talk about just now. So as we all know, being from the trade finance world, banks play a very critical role in global trade finance. And the, I think, estimates that we have in terms of how the value of the transactions there, banks are involved, especially in the part where banks are supporting other banks, it's somewhere between 3 to 4 trillion. That's a summary or a sum of the total of the primary and secondary transactions that we estimate is happening between banks today. And as you would know, this is done through extension of credit limits from developed country banks to maybe emerging market country banks, and the exposures that are again transacted in the secondary market using the risk participation format between these banks. So it's a significant number we are talking about. And what is actually even more significant is the trade finance gap that exists today. So again, I've been in this industry working with international banks for many, many years, and I've seen the cycles. I've seen when the banks really are interested in cross-border trade, when banks are expanding, especially the large international banks. And then we've seen waves of regulation, we've seen waves of regulatory fines, and we've seen a withdrawal, we've seen de-risking, we've seen basically banks really focusing on risk versus reward. And that has impacted a lot of markets as banks have retreated from entire continents sometimes. And this essentially, we feel, is one of the large reasons, major reasons why there is a huge and growing trade finance gap. That figure, I think, used to be about 1.6 trillion in 2016 or so, but from the latest estimates, I think ADB and Standard Chartered, it's somewhere between 3 to 4 trillion. So it's a significant gap. And once again, establishing the fact that this is a problem. We talk a lot about financial exclusion. So we do agree that banks, a lot of individuals are disconnected from banks, and that exclusion is a serious problem. We're all aware of it. I think there are people working on this. I remember Cybos in I think it was 2015 in Boston, where I think Bill Gates came on a platform and talked to the bankers about including individuals and how they can do that. So using technology is one solution. However, disconnecting banks and their entire ecosystems from the international financial system has a much more devastating effect. And that's the issue that we are actually addressing with trade assets. Again, bank-to-bank dealings today are completely manual. So it's phone calls and emails. There are international banks talking to their correspondents. There are regional banks that are talking to each other. There is no platform on a global basis that connects banks together for the purpose of risk mitigation and risk sharing. And given the fact that there is a great dependence on the larger banks, the banks with network and balance sheet, to make this activity happen, there are many that are now without cross-border access. So if you've been in the banking system, you've definitely been connected or contacted by a bank which has told you that they're looking for access to clearing, to dollar clearing, for example. They're looking for access to limits. So, I mean, if you can summarize the problem as we look at it today, there's silos, there are clusters of banks, there's restricted access, and there are barriers to communication. So the good news is that although this is the problem, there is liquidity. And I would say if there wasn't a huge secondary market, I would say I would feel there is just not enough credit limits available in the world to support or cover this 3 trillion or 4 trillion trade finance gap. So this trapped liquidity is, again, I think one of the major problems that we face today and that problem that we're trying to solve. So it's a bit like everything kind of works, but then if you look at it from 30,000 feet, it looks like this slightly unsolved puzzle. And we kind of looked at this picture of somebody trying to actually solve a problem in a bank. It's probably a guy, maybe he works in trade, maybe he works in the secondary market area, but we also can probably look at the same bank and we see this. So that's obviously the dealing room. So while we've seen electronic solutions for the financial market and the global markets instruments for decades, the question really was, why didn't we have a solution for the world of trade and for the world of, let's say, other correspondent banking products? And that essentially is the problem that trade assets is solving. And we, in a nutshell, are creating an automated world for the pricing of trade finance and other correspondent banking transactions. And that is the bridge we were talking about. Now, quickly about building the bridge. This is where we started. We went to beta. We then went to live transactions. Then, as of last year, we've crossed a cumulative $3 billion in volumes through the portal. There was a global pandemic in between, so that did restrict access, but it did not stop the banks from coming on board. So I'll show you the ecosystem in a while, but very simply, this is the solution. It's about globalizing bank-to-bank relationships. It's about creating a multilateral contact between banks. It's about giving member banks access to credit beyond their usual correspondence and vice versa. And all the while, creating an audit trail and an easy-to-access data stamp between the banks as is captured in the platform. So That's the story so far, 106 banks. This is really the update where we showed the same slide last year. I think we had some 75 or 80 banks. We have 106 banks from 30 different markets. We're working on 200 more to be added in, hopefully in 2 or 3 years. A couple of testimonials. One of our, I think, most active banks basically said that it's the way trade and business should be done in the digital world, which is shifting from the traditional methods. So we've got active users in the UAE. We've also, I think I'll just harp on this comment by Citi. I think the platform has the potential to change the way trade is done, but it's a combination of people and technical functionality. So talking about the people, we have a team of bankers, ex-bankers around the world, each with at least 25 years of experience, and connected to hundreds of banks globally. Because the effectiveness of this ecosystem is really the size of the ecosystem, and these bankers have the ability to bring this community together. So we are really talking about change in habits, change in the way that banks interact with each other, change in the way they do transact with each other. So here's the ecosystem. We've got a significant number of banks from South Asia, and then we have a growing, again, similar ecosystem forming in the Middle East. We've got a very fast-growing membership from Africa. I think, in fact, out of the last 30 banks, it has been mostly Africa who's joined us. Then we have the international banks. Right? The other thing we are doing is, of course, creating corridors.
Just under 2 minutes.
So various corridors actually are being created for the first time. And these are the bridges that we're talking about. And these bridges are growing as the ecosystem grows further. So in a nutshell, it's a simple solution. The simplicity is actually the beauty of the solution. The fact is that you are bringing pieces of that puzzle together. And it's an effort that we are putting together with the entire industry in partnership with all the banks around the world. So it's about unlocking that liquidity. It's about declustering those clusters. It's about creating access. It's about breaking down those walls. And I won't go so much into the technology part of it, but it's essentially giving every bank access to more transactions, therefore more revenues, more deals, the ability to negotiate faster in real time, churning their capital faster, and essentially for banks which have capital and liquidity but don't have a network, giving them that access to deals in a digital network. So a little bit of the stats so far. It's upward trajectory, but we hope to accelerate this further. The quick look at the future, we're looking not just at commercial banks, we're looking at multilateral banks, we're looking at development banks, looking at credit insurers, everybody coming into the ecosystem. And we'll have borrowers, we have lenders, and we have liquidity providers into the platform. And that's the way we are seeing this shaping in the coming years. In the end, this is what we hope to achieve. It's about inclusion. It's really about supporting economic growth. And it's about helping alleviate poverty. That's the objective. And that's the end of it. 5 seconds.
Well, actually,
Thank you, Vin.
4 seconds, but that's pretty good. Well done, well done. So, Anna, we'll get you to kick off the questions, and thank you very, very much. Over to you, Anna.
Starting with a comment, very impressive development throughout the last year especially.
Thanks, Anna.
You mentioned a very important topic for the banks nowadays. Access to finance is the one issue, but access to correspondent banking, second issue. So my question would reflect the second part. How, if I'm a respondent bank with your solution, how do you solve this problem for me?
So what's happening is a couple of things, right? So we've got banks who are interacting with their existing correspondents or existing partners through the platform. So the platform really does two things, essentially. One is access, the other is efficiency. So efficiency is the part that involves known counterparts, a bank which knows another bank across the border, dealing with each other. There is efficiency because they see transactions, they're doing it in 3 clicks on a screen rather than through phone calls and emails. The other part is access. So access is the part where a bank which does not have established correspondence is looking for more partners, is able to come on the platform and post their transactions. What is happening is these deals are being seen on a daily basis by banks who have liquidity but do not have the relationship. So the people behind trade assets are actually connecting banks who are interested in forming relationships. So there are 2 efforts that are going on, one through the platform, the deals. The other is the introduction of member banks to each other. And those were the corridors where I kind of briefly ran through, is that we're connecting banks in Vietnam now with banks in the UAE. We're connecting banks in Bangladesh who have actually not traded with certain banks here with the UAE. We're connecting LATAM, for example. We have a first multilateral bank which joined us in December, that's Pladex. And Pladex had never transacted with Indian banks before, so we actually have connected our Indian members with Pladex. So those are the corridors that are being created, and that's the solution, I think, that will accelerate, I think, as we see more and more of the ecosystem.
Thank you. Very impressive increase in membership for the network. And if I want to become a member, what do I have to do? And do I have to become a member in order to connect to the your network?
Yes, and it's a very simple process because there's no system integration. It's a online portal. So there's a one-page member agreement. We, in a lot of cases, are not insisting that members pay upfront to come in. So some members prefer to stay for a while, look at everything, look at the transactions, and then decide later on that they want to stay and they want to pay for it. Typically, everybody does because this is just a better way of doing things. But the access is very straightforward. Just one-page agreement, and you're a member.
You triggered me to the next question about the pay. So. Sure. How do I justify, I mean, if I'm a new member from the emerging market or developing market?
Yeah, we've kept intentionally, see, our objective was really about scale and growth. It's about volumes. So there is a subscription fee and there is a transaction fee. The transaction fee is only on success. So you only pay the platform a substantial amount, depending on the size of the deal, if you actually successfully conclude a deal on the platform. So you're only sharing a very small part of an incremental revenue that comes into the platform. So anyway, right now, even the flat annual fee is a very small amount. It's a few $1,000s. And typically, the benefit that you would derive from the platform, including just the speed at which you can turn around your capital and do transactions, we feel it's far greater than the actual cost on the platform.
Thank you.
Sue, okay.
Samit, it is, thank you for the presentation because I totally agree with the problems and the solutions that you explained. And we cannot talk about the competition because of the huge trade finance gap in the world. So what I'm seeing for the last couple of years back, the older banks, especially the old mindset, senior executives also opened their door, this kind of, how can I say, market platforms, which is quite good. But I want to ask something. If I'm, as a bank, if I come to you and lend your clients, who is registering these credits? Bank or you?
Who is
registered? The credit is who is? How can I say? On which balance sheet is this credit is located?
Sure. Yeah. So our role as trade assets is really the infrastructure. So the relationships between the borrowers and the lender, or the lending banks and the borrowing banks, or let's say the issuing banks and the confirming banks, is still bilateral. So you, as a lending bank, would come on and lend to the balance sheet of the borrowing bank. And I think maybe just to go back to the competition element. So there are many platforms that are actually pricing or price quotation platforms, but a lot of them are, virtually all of them, I think are corporate originated. And we wanted to solve this issue on we talk about institutional exclusion. We wanted to look at, I mean, in my old job, if I remember this, there was a time when we had a new board. And the board basically said, we're doing business in very risky countries. And somebody said the whole of Middle East and Africa was risky. And I was running Middle East and Africa. So I felt that the perception of risk actually creates an element of fear, which creates exclusion. So for us, the issue was we wanted to create a global solution. And to do that, we wanted to essentially capture 250 to 300 of the banks, of the world's most relevant, I would say, regional and international banks, thereby solving that problem. So the platforms that are existing today, a lot of them are in very specific ecosystems, SME to bank, corporate to bank. Our solution had to be cross-border bank to bank. So we onboard only licensed and regulated commercial banks onto the platform. And discussions we're having with multilaterals is also to bring additional liquidity. So the main problem you have today is I don't have lines on this bank, or my limits are full, country lines are full. So using the guarantee program of these multilaterals, we want to add that liquidity onto the platform. It's not that it's not happening today, but it's very haphazard. It's phone calls, it's emails, it's somebody has to send a fax, somebody sends an email. What we're trying to do is get all the participants in the same place digitally, so that all these transactions that can take weeks or days can happen in a few clicks.
Well, thank you. That was really wonderful. So could we give all our contestants a round of applause? So, of course, our program has adjusted a little bit, but I really think both panels this morning were really fantastic, okay? Really, really good, really, really practical. So we're going to take a coffee break, a networking break, and we're going to be back at, we're going to give you just under 20 minutes. So let's be back sharp at 11:40, because I promise you, we have a wonderful presentation coming up with Dr. Christopher, and then of course Mohammed. So we'll take a 20-minute break and see you all back. And when you come back, move up to the front a little bit, because then it's going to get really intense from now on. Okay? Thank you. You're a professional. Great. If everyone can kind of come in, we'll be starting in about 2 minutes. And this will really be wonderful. And please come forward. Come forward. Come forward. Yeah, I think. Come on down, ladies. Come down, please, please. Yeah, you gotta come. Come on. You gotta go. You gotta go. Yeah. My power of attraction. Wonderful, wonderful. Yeah, and people coming in on this side, yeah, come down a little bit. We'll be starting in less than 2 minutes. And yes, so you look great on stage, but maybe later, you know? Maybe later. Okay, wonderful, KP and colleagues, please come forward. Our last two sessions were so inspiring that everyone outside, the noise of everyone talking and chatting and trying to determine who the winner may be, it's really, 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 really engaging. So we're looking good. And I'm just going to give it another minute or so. Yes, people are coming in. I can hear the bell is ringing outside, right? Yeah, great. Okay, Habib, we'll be starting in 1 minute. Keep ringing your bell, yeah. We had two bells, but Dr. Christopher, someone stole my bell because I was... oh, it came back. It has been returned. It has been returned. It has been returned. Okay, come forward. Yeah, wonderful. Wonderful, yes. Yeah, people are coming in now. We'll start in 2 minutes. Yes, and this is absolutely great. Wonderful. Great. Yeah, and move forward. Yes, that's great. Lovely, lovely. That's great. Okay. Oh, and I see our colleagues from China have entered the room, which is a good sign. And yes. Oh, Claudia has arrived. You look very happy. Good. Okay, we're going to start in a moment. Yeah, please come forward. Come down near the front. Okay, ladies and gentlemen, we're going to get underway. We're going to adjust our timing, but the timing will not be adjusted for our speakers. Our speakers are going to get their full time that's on the program. And we've heard a lot of information about what's coming down the road in terms of the economic challenges, etc. And some of it is pessimistic, a lot of it is pessimistic, but we're going to have a very engaging presentation. So the Global Trade and Business Outlook or Lookout. So Dr. Christopher Abraham, CEO and Head Dubai Campus, Jin School of Global Management. Dr. Christopher, please join us on stage. Can we give him a warm welcome, please? Thank you very, very much. Wonderful. Great, great, great.
Thank you, sir. Check, check. Good afternoon, everybody. Good afternoon, everybody. I need to keep you awake after a coffee break, so thank you very much. I have one humble request before I start my presentation, and that is to request all of us to keep these evil black technical contraptions away for the next 39 odd minutes. I've got something very interesting and very important to share with you, and I wouldn't want you to miss the critical nitty-gritties of what I have to share. As Mr. Vincent said, we're going through some very interesting times, challenging and, of course, complex. But how do we resist? How do we confront these challenges is what I'm going to share with you. Let me start with a little video which probably sets the stage. that isn't a beautiful picture at all? And that's from the IMF. So we got to believe what they try to say. And they cut down the global outlook, going down, deeper down, and with other kinds of complex challenges surrounding us. Here's another one from the Standard & Poor, global GDP growth to slow down. In fact, it's become one of the worst in the last few decades, 2022, and to some extent, we are limping into 2023 with this kind of a picture. That's the World Economic Forum, which talks about a global survey done at the beginning of this year. They say 100% expect geopolitical fault lines across the globe. 91% believe it's going to be weak demand across products and commodities throughout this whole year. And the cost of borrowing is going to increase by leaps and bounds. And the recession to continue. Recession itself is a very strange, complex, scary word, which has different interpretations for different people. And this is the picture from the World Economic Forum. What about this crazy word called stagflation? Again, if you look at it, but if you look at this picture very carefully, you will see that places like Europe, it's 100%, and United States, 91%. And we're talking about Middle East, North Africa, which seems to be a kind of, let's say, a rosy pathway in comparison to the others. Well, more on it a little later. It's getting even worse. And if you're looking at trade, look at 2022, 2023, because that's where we are. And you would find that 2020, of course, we know the reasons why there was a dip. 2021, it picks up. 22, it comes down. And 23 kind of tapers again with the same levels of last year. All right, so seaborne trade, again, nothing great to talk about, both in terms of tons and in terms of value. Now, here's something interesting, and which has been done over decades of research from stock recoveries. They normally have this tendency, to recover before the 6 to 8 months before. So if you track the trends of the markets across the world, you probably would find there is some interesting indicator of good news coming up, right? So this is again validated by research based on Capital Group, Federal Reserve Bank, so on and so forth. Bonds versus equities in tight, controlled, uncertain environments. Bonds seem to be much more safer. Again, food for thought. And if you look here, and it's very interesting that bonds and equities are kind of more or less similar when both declined in 2022. Normally it's it's counter, it's vice versa, but interestingly you see this. And again, planned development spending. Again, you see the sordid figures. And I don't want you to mistake me as a doomsday prophet, because I've got some very interesting insights coming further after all this doom and gloom. Some of you are now smiling. All right, so that's the S&P 2022. Again, not good at all. If you look at let's say from 2020 till 2023, it's again dipping. So inflation has reached a peak, but market may be too optimistic on progress, right? So that's an interesting dichotomy, a paradox. Okay, the expectations have fallen in terms of inflation. It still remains pretty high in most economies, right? And most recently, just about 7 days to 10 days, we are seeing this scary picture emerging. Lots of uncertainties, lots of complexities. You remember there's something we call the VUCA world. Last time in the same forum I had introduced volatility, uncertainty, complexity, and ambiguity. But we said we could counter volatility, uncertainty, complexity, and ambiguity with another VUCA, which stands for vision, understanding, agility, and clarity, or vision, understanding, clarity, and agility in that order. So, while this is happening, we're also marauded by headlines across. How many of you read the newspapers every day? Raise your hands. Okay, bad news. because what you see on mainstream media is most of it negative. And I want to share with you here, with due respect to the press, that media has a way of bringing in messages that manipulate our minds. You can check this out, because it's not all doom and gloom. Yes, it is, but we have survived. We have survived the pandemic. We have survived inflations and recessions. We have survived all kinds of challenges on an ongoing basis for centuries. It's not just a new thing. So I think what we need is a kind of mindset shift, and that's what you're going to see. This picture, I will revisit this picture again in terms of what it has to offer. We're saying that tech companies are laying off. Right? We see this. This is not a good picture at all. It looks fancy, but it isn't. It's people taking all the stuff and walking out of the office, not knowing when or if they will actually return back to their workspaces. So, in these tough, complex times, is there a mechanism by which we can accelerate positive change? And that's going to be the focus of my presentation. You've seen all the doom and gloom. There's nothing new in what I shared with you. It's scary every single day when you open the papers, but is there a way out? And that's what I'm going to share with you. 3 interesting factors, what I would call a future mindset, understanding the mega trends that are happening around us, and transforming the future with the right mindset and with the right focus on the future. So, here's a question to you, and I would like you to, share your thoughts. How do you see the future? Anybody? Brighter. God bless you, ma'am. God bless you. Anybody else? Brighter. Wow, I love this group. Excellent. Anybody else from the middle, from the back? Come again, ma'am? Wonder? Wonderful, wonderful. I love you people.
Brighter, but only because you're motivating us.
Oh yeah, I will validate that, sir. I will validate that. The first understanding here is that, what is the future? Is it 5 years from now, 10 years from now, 15 years from now? Or, as many would say, the future is now, right? So that's an understanding that we need to contend with. Now, this is a reality. In the last 20 years of the new century, we have seen some dramatic changes which are completely accelerating our understanding of people, our understanding of technology, and most importantly, the interconnection between human and technology. On one hand, we're being overwhelmed by technologies like ChatGPT. Now a version 4 has come across, and it's even more scarier. And every time you see these new technologies coming in and saying, what's going to happen to me? And the reality is, we will survive. And I'll validate that as well. Here's a quiz question for you. I've got a set of companies listed on the screen, and I'd like you to tell me what is one thing that's common among all these companies. You've got the GE, HP, Microsoft, Google, Apple, eBay, and then I've got at the bottom CNN, MTV, FedEx, Burger King, and AirAsia. Just an indicative list, but love to hear your comments. Anybody? One single thing common to everybody. Come again, sir? Okay, except AirAsia American, that's a smart answer. Anybody else? Come again? They are multinationals, okay? They are multinationals, of course. Open to change, that's a very good answer. I'll take a couple more. Yes, sir. Okay, they are in customer service, they are buyer-oriented, all interesting, good answers. But here's the real answer. Every one of these companies was born in the middle of a recession. I want that truth to sink into your mind, and that's just an indicative list. We've got hundreds of companies, very successful across sectors, across industries, who not only survive, but thrive in the middle of recessions. Are you with me? Are you getting where I'm coming at? So on one hand, you have the doom and gloom that's portrayed by the media, and I'm not denying them, I shared you the statistics. On the other hand, we are also seeing another paradoxical picture of companies that were all started in the middle of the recession, and this is just an indicative list. There are hundreds. If you go back after the recession is over and Google search, find out companies started in the recession, you would be delightfully surprised. And there was one professor called Schumpeter who actually did a research for many decades to prove that every time there was a catastrophic calamitous situation in the environment, it actually gave a boost to innovation. So keep that in mind, that when there is a tough time like the current times, there are interesting times ahead, because that's the time, as Intel founder would say, only the paranoid survive. So we need to be a little paranoid, but we survive. And later I will introduce you to another interesting concept introduced to the world by the former Nokia chairman, Risto Salasma, called paranoid optimism. I'll come back to that in a minute. So recessions are inevitable. Economic cycles are a fact of life. We go through booms and busts, and we probably take a leaf from the airline industry. If you're familiar with the airline industry looks at recessions, and when the curve is at the bottom, that's when they order planes for the future. I think there's a very interesting apocryphal message there for us, that during the recession is when you plan for the future, because the whole cycle takes about 18 months to 3 years. So normally during a recession, that's when they say, okay, in the next 3 years, we're going to go from, bust to boom. So let's now plan ahead. And that's the whole cycle of the airline industry. So mid-cycle, late cycle, we're seeing this happening in different countries. They've marked it. Some countries are doing pretty well. As you know, India is on a growth trajectory, followed by US, Japan, of course, the cycle recession coming down. And then we're talking about the recession and the recovery. So this is a cycle that's going to happen. How we plan, how we keep our mindsets, how we stay the course, as some economists would like to call it, is the key mantra towards these recessionary times. Now, here are 4 options for a central bank when it's trying to address inflation, when it's trying to control the recession. It's a tightrope walk they have to do. Now, you can see on those 4 boxes, there are 4 options available to the bank. The bank tightens its interest rates and tightens the way money gets liquidated in the marketplace, or it stimulates more liquidity so that people can spend and consumer spending goes up. And then you have inflation which continues, or inflation that ceases, that reduces. And in each option, you have things that will happen. When central bank tightens and when the inflation persists, we call it a hard landing, and we wish and pray it doesn't happen. We are talking about a soft landing in spite of the banking crisis that's currently going. And then when inflation ceases, but the banks are tightening, then we call it a soft landing. Then stagflation, when inflation persists and central banks, stimulus comes in, but still nothing great is happening. But the real good news happens at the bottom right hand when return to above average growth. So that's from a pure banker's perspective. Central banks, they're the ones who, figure out how to increase or decrease interest rates, how to stimulate consumer spending. You remember this picture we saw, which is kind of scary? Tens of thousands of jobs being knocked out from some of these biggest names in the tech business. And 2 weeks back, if you've read the newspapers, there was another company. Many of you may know this company. This is a New York Times, NASDAQ listed company. It's one of the biggest IT firms in the world. And the chairman made a very bold statement. Just 2 weeks back, in the middle of all this doom and gloom, the chairman of TCS said, we are on a recruitment spree. We're going to recruit thousands of people. And he said, we promised that not a single one would be laid off. I'm not here to blow the trumpet of TCS. I want you to understand that even in these uncertain, volatile times, there are companies that take knee-jerk reactions, and there are companies who are able to see beyond. So what is it that, and they're similar, if you look at the size in terms of market caps, in terms of the number, this is a 500,000 people company, so it's a pretty large company. And they're saying, we will have thousands of jobs, we're going to recruit, they are doing it as we speak, and we will ensure that every job remains stay put. And that's the good news. And so which means, even within an industry that's being challenged by current scenarios, there are companies within the same industry who actually do something completely contra-indicative. So, the future mindset. What do we mean by a future mindset? We have an awesome God-given brain, but trust me, many times we are flawed by cognitive biases. Here's the first lesson, okay, the first insight on how you can do it. We call it the optimist's telescope. The optimist telescope is a scientifically proved approach to think long-term rather than short-term. Behavioral economists, behavioral scientists call this hyperbolic discounting. Don't worry about the terminology. What it means is that our minds are normally focused towards the short term rather than long term. Let me give you a simple example. If I tell you I'm going to give you $500 in 2 days, and if you wait for a month, I'll give you $600, I can tell you very confidently, almost a lot of us would pick the $500 because we're not able to think long term. That's a flaw in our cognitive process. But if you're able to train your brain, and again, neuroscience tells us that we actually can train and change our brains, change our thought processes. So instead of looking short-term, myopic, and scared, can we plan ahead, like the airline industry, looking 3 years, 5 years ahead? And I'll give you some mechanisms for it. In fact, the word was coined by a lady called Beena Venkatraman, who used to be the advisor for President Barack Obama. Okay, so she's got a book by the same name, The Optimist Telescope, which teaches us how to train our brains to think long-term rather than have a short-term outlook. Now, there are some companies that have done this remarkably well. How many of you know this company, 23andMe? Okay, very, very interesting company. If you go back to the beginning of the century, when the human gene was being edited and understood in terms of all its nitty-gritties, it costs $1 million to actually splice the gene and find out what goes inside it. This company has made it affordable to every citizen on this planet. At less than $100, you have a whole range of services they can offer. Of course, in the Middle East, it's still not available, but in most parts of the world, you can actually order a kit. It comes home, then with a couple of swabs, they would be able to tell you your history, your connections, your legacies, your genealogies. It's mind-blowing at the cost of probably a family pizza party. $99 to be more precise. Here's another company, which was one of the pioneers during the COVID pandemic and was part of the pandemic mitigation process. And what after? Again, I allude to Dubai. When people said after the Expo 2020, which happened in 2021, what next? And Dubai said, we will plan ahead for that. And they went ahead to create an Expo City. That's a good example of how you stretch and expand an opportunity which could become a challenge. But if you plan it well ahead with the right vision, then this is what happened. They continue to do remarkable work on the biotech space. It's a very simple company. Many ladies would probably remember this name. It's a very, very, favorite for women across the world. Shane works on a TikTok model. In other words, the promotions happen on TikTok, which is watched by youngsters. And youngsters then order. They have a fabulous range, and they offer these at prices which are affordable and at the right times. So, how many of you have heard about this company? 12. 12 was revolutionizing aviation fuel. In a time when we are talking about carbon emissions and environmental damage and climate change, 12 says, is there a way we can keep planes afloat, flying with an energy conducive or an energy friendly fuel? Watch this. Welcome to the world of infinite possibilities. That's what it is. Whoever thought that air fuel or jet fuel could be so eco-friendly? Friends, I want you to remember that this is done by people like you and me who understand the world of infinite possibilities, right? There would be these challenges. So I'm not going to paint a picture saying none of these challenges are going to exist. But the good news is that among and amidst these challenges, there's an awesome human mind capable of remarkable stuff. And that's why we use this oft-quoted term saying the future isn't what it used to be. Historically, if you're like me from the earlier generation, our world was predictable, our world was linear, our world was based on stability, efficiency, and optimization. The future is unpredictable, and it's going to continue that way. But what we need is imagination, and I'll spend some time on the scientific basis of what we mean by imagination, agility, the speed at which we can react to the dramatic changes around us, innovation, which has to be continuous, not just the prerogative of the R&D department, and most importantly, prototyping and experimentation. Make those small experiments, fail fast, fail forward, move on to the next big thing, right? This is how it's going to be. And if you put ourselves, and I've just put ICC UAE in the midst of it all, considering all of us are members, this is what you're going to face. Economic uncertainty, technological, these are no-brainers. There's nothing unusual about regulatory pressures, next-gen investors who are very conscious, ethical, and want the right kind of values to be portrayed. Customer power, bargaining power of customers, digital disruptions, sustainable investing, and new mindsets and skills. This is a reality that we face. So the future isn't what it used to be. Now here's an inflection point. Industry after industry is being disrupted, whether it's shipping, whether it's logistics, whether it's trade, whether it's automotive. And you see the companies at the bottom, companies like GE, Kodak, and Nokia, who kind of got challenged within their respective industries and probably got blown out of the success tarmac. But later I'll come back to Nokia and say how they made a dramatic comeback. And many of these have been completely disrupted by radical new technologies. And that's why I love the theme, transformation and technology, right? So transformation, in my mind, happens in the human mindset and, of course, complemented with technology. So what we need is we need to reimagine our businesses. Look at that little kid driving a bicycle, but he's got a rocket propeller on his back. And that's the kind of mindset we need. We need to have a childlike imagination, a childlike never say die attitude, a childlike attitude to dream big and think big and do big. Would you believe that one of the world's largest cigarette companies took a New Year resolution? This is a real advertisement, by the way. They're trying to give up on cigarettes. What it means is companies being disrupted by various environmental factors are getting their act, the skin in the game, right? And they're doing some remarkable stuff. Read that ad and you'll realize that there's a lot of sense in what Philip Morris is saying. They were the ones who perpetuated this dirty habit of smoking. Pardon me for saying that, but there you have it. They're saying we're going to give up smoking. So, for a leader, a trade leader, a business leader, a commercial professional, you need to shift your mindset from the conventional thought process of performing, which is quarter on quarter if you're a public listed company, or if you're a startup, then you're looking at how do you, increase your revenues. From performing to transforming, from profit to purpose, from corporate to startup, from technology to human, and from enterprise to ecosystem, and from stability to agility, and from local to global. So this is the new mindset that is required, and you need to prepare yourself to, get these included in your system. Let's look at the mega trends. I've got about 12 minutes, so let me quickly run you through these mega trends. On one hand, you're seeing the choppy waters, which is what we saw when we started this. But we need to understand that on the horizon are some amazing opportunities waiting to be tapped. Number one is an aging population. You can look at that as an opportunity, or you can look at that as a challenge. How are we going to feed them? But if you upskill them, keep them healthy, keep them available for all kinds of opportunities, that's a fascinating thing that's going to happen. and 45% increase in the over 60s by 2030. It's a question of intelligent, wise planning ahead to ensure that they just don't remain, health wrecks. Asia, as most of us know, is booming, right? So it's going to become a $10 trillion new mindset and market opportunity waiting to be tapped. We're moving from conventional computing to cloud computing to cognitive computing. Cognitive is a nice fancy term for thinking. Computers that can think. That's scary, but if you know where to draw the line, that could be another interesting one where we transition from automation to intelligence, which will drive about 15 trillion sales. These are validated by feasibilities and market studies. Living, there's a huge shift from moving from rural areas to cities. So again, big opportunities happening. 45 mega cities, 33 of them in Asia. And then the eco-innovation. We're talking about the green economy, the circular economy. These are multi-billion-dollar opportunities waiting to be tapped. Let me give you just one example. The United Nations has 17 Sustainable Development Goals. They are not just fancy statements. If you look at each one of them, and if we actually focus on them, there is great things we can do to transform the world. But here is the other perspective from a business, angle or a business lens. That's a multi-billion-dollar opportunity waiting to be tapped. So you're doing good, you're making good money, right? And that, I think, is a great combination to explore. The world is getting fragmented, as we know, right? So from global to regional, right? So that's happening. So though we recommend local to global, this trend is also going to revisit us. These are some of the most successful companies, innovative companies across domains, right? So if you look at them, you can learn a lot of insights on how they not just survive, but thrive in uncertain conditions. And as you can see, the names, many of them are quite familiar to us as they disrupt. But this is a great company that I want to share a minute with. I'm sure many of us would have heard of Haier. It's a Chinese company, but would you believe me if I tell you, Haier is the world's #1 white goods manufacturer, right? That's #1. Number 2, they've even taken over companies from GE and many other white good manufacturers across. But even more interesting is that this company is run by this remarkable genius called, Zhang Ruimin. That's his name. This guy takes over and runs it as 10,000 micro enterprises. Okay, so each one, it's about 20,000 strong company, but each of these are run by micro enterprises of 18 to 20 people. They run their own revenues, they have their own costs, they have their own profits. It's like the traditional SBUs as we call, but each of them are measured against performance, measured against profits, and they're doing remarkably well, right? So this is how they have moved over time from brand building to today looking at an eco-brand strategy. It's a fascinating case study of what can happen even in a so-called regulated traditional environment like China. Food for thought. So, one of the easiest ways to look at things rather than myopic and look at what is around us in terms of what's happening would be to look far ahead, at least 5 years ahead, and then work back. Ask yourself a simple question: where do I want my business to be 5 years from now? And you need to have that optimism, which is today validated by science. And what we need is to address this very important question about the why, rather than the what and the where, which we anyway talk about, the strategy. The most important thing is the why, the purpose behind our business. And interestingly, purpose-driven business result in better profits. That's a discussion for another day, right? Take Tesla, for example, which disrupted. This was an industry that should have happened 100 years back. Some of you would understand what I'm saying. The oil majors took over and ensured that batteries don't come across. After 100 years, it's been a wake-up call thanks to crazy people like Elon Musk, who disrupted that industry. Sustainable energy. Now again, there's some very interesting developments. How can batteries become more sustainable? How can we create a total new ecosystem which can be totally friendly? Should we move away from batteries and look at something even more friendlier? That's food for thought, right? So that's where we are. And the third one is, how do we create positive change? Right. So we looked at this picture. So we moved from performing leaders to transforming leaders. Look at the present and improve the current business under all these uncertainties. Explore the future by innovating the next business. So if you're in a particular industry, you may want to explore what are the trends that are happening which are disrupted by technology, by consumer behavior, by new kinds of, we saw some 4 fascinating presentations of people bringing in tech into a traditional trade-oriented industry, right? So that's the kind of disruption that we are looking at. I don't know how many of you know this company. This is today the world's largest, clean energy company. It was a traditional energy company, which was, actually supplying, it's a state-owned company, which was supplying traditional energy through traditional sources, and then said, that's not the way we're going to do it, and went on to convert it into wind power and all other alternate energies. It's extremely profitable, extremely carbon and environment friendly, and is disrupting the world of energy. So we need to look at a language called business transformation, which means you transform A, strengthening today, look at transforming B, which is creating tomorrow, and then flip the dilemma, which means you look at what happened tomorrow and then see whether, because history repeats itself. Opportunities repeat themselves, so you need to look at that and see how this works. And I'll give you a great example from Nokia. Many of us know Nokia as a company that lost its bearings. It became the world's largest mobile manufacturer in 2008. And by 2012, they were on the brink of bankruptcy. And then something remarkable happened, which many of us may not be aware of, that Nokia is back on a steady state of growth, probably towards past levels. And how do they do that? By doing something which the then chairman, called paranoid optimism. What's paranoid optimism? On one hand, you have fear. On the other hand, you have hope. This is a 200-year legacy company. So they just lost out because of the changes that they did not foresee in the mobile market. And that doesn't mean the end of the world. So they reimagined themselves, rejigged their industry, looked at how they could make themselves relevant in mobile technologies, in 5G networks and communication technologies. And today, along with Siemens and Ericsson, they are doing a remarkable job in the back end of technology and doing remarkably well financially. So this could be another source for you to refer. He's got a website dedicated to paranoid optimism, which is a contradiction if you look at it semantically, but makes a lot of sense. You need to have the fear, at the same time be optimistic. So these are great leaders across different industries, disrupting their respective industries and doing themselves proud and staying relevant even in these tough, uncertain times. So the question, where do I start? Okay, can imagination be the key? Because normally what happens when this doom and gloom is portrayed by the media, our brains go back to depression modes, which is brain chemistry in action. So if I can get away from that and start using my imagination, can this work? And you would see that we live in both the visible and invisible world. Is one way what we see, and the other is what we imagine, which influences what we are. This is a highly recommended book if you have the time and the habit of reading. Jane McGonigal, she is one of the world's leading game designers and a futurist. And she has combined her expertise in game designing, psychology, and future thinking, and has created a model that works because Jane was consulted 10 years prior to the pandemic about the impending things that could happen. And Jane, in her laboratory with tens of thousands of people across the world, had successfully simulated a pandemic, which happened in 2020, the alternatives and what can happen. All these were beautifully crafted and simulated by her using some mechanisms. And she has 3 words. One is what she called positive imagination. And what's positive imagination? What is something good that can happen in spite of all these calamitous, complex situations? And it builds the confidence that the future is going to be better. She also wants us, you need to have something called shadow imagination, which is the opposite of positive imagination. What's something bad that could happen, which builds readiness to face future challenges? Again, from her research. And then she talks about something called urgent optimism, which is a variation of the paranoid. The desire to act immediately to tackle an obstacle combined with the belief that we have a reasonable hope of success, right? So that's urgent optimism. So 9 quick thoughts which you need to do in these tough uncertain times. Have an inspiring purpose. Refrain from the outside and look at what your customers want. Look at what your suppliers are doing. And look at the world not from competition, but from a word called co-opetition, whether we can coexist, collaborate, cooperate with different stakeholders, including our competition. Cemex is one of the leading cement producers in the world, and they are aligned their entire purpose towards the sustainable goals. Zhang, I've told you, starting from future back, then creating an ecosystem of partners. And these partners are all in that stakeholder value chain, right from shareholders to customers, to employees, to governments, to society, and everybody else, and of course the investors. Okay, so that's an example. Disrupt yourself, like how Spotify did that, from the old self disrupting to a new self. Having a better view of the future with smarter ways to innovate and a faster ability to implement. And continuously be somebody who is able to transform. That's why I love the theme, being a relentless transformer. And lastly, have the courage to be more. You need to have the courage to try, experiment, prototype, the courage to trust that tomorrow will be a better day, and the courage to tell boldly, don't listen to those negative conversations, right? There's always hope. We have survived 20 centuries, and I'm sure we'll survive the next 20 centuries as well. And finally, how will you create a better future? Be bold, be brave, and be brilliant.
Climate change,
deadly earthquake,
a suicide bomber,
terrorism,
nuclear device in the heart of the nation's capital.
It's no wonder that we're pessimistic. It's no wonder that people think that the world is getting worse. But perhaps that's not the case.
Perhaps we forget that we've only just begun.
Doing what's never been done before is intellectually seductive, whether or not we deem it practical.
What we're seeing is unfathomably new possibilities all of a sudden becoming available to us.
The future doesn't belong to the faint-hearted. It belongs to the brave.
You have to trust in something. Your gut, destiny, life, karma, whatever.
We truly are living in an extraordinary time, and many people forget this.
So now technically your device is on. Can you tell? Can you hear me?
The yearning to do what we do in the service of something larger than ourselves.
Where did we come from? Are we alone in the universe? What is the future of the human race?
When you conduct those exercises, innovation follows just as day follows night.
We can do this. I know we can because we've done it before.
Stay hungry, stay foolish.
On that beautiful positive note, I want to thank ICC for this great opportunity and wish you the very best.
Well, Dr. Christopher, all I can say is you're definitely bold, brave, and, well, I think the big one is the B for brilliant. You really, really inspired us all. I've had so many messages coming in through the app saying inspiring, encouraging. I've changed my mindset. So thank you so much. Could we give him another round of applause? Really fantastic. Really, really, really great. So we're going to continue with another expert. We have experts in this program that I think you don't find anywhere else in the world, really. So now we're moving on to Mohammed Dal, Director at Moody Analytics, and he's going to give us an oversight and his views and some really good information on the ever-changing compliance ecosystem, shifting sands. And I think shifting sands is a really good imagery to have, because here we are in Dubai, in the UAE, where everything was built on shifting sands. Mohammed.
Thank you. Can you hear me?
Yes.
Okay. So let me just, I'm going to entertain you. Talking to you about a parallel world to your business world that you don't see, which is impacting you on a daily basis, and sometimes you ignore it. So, and don't worry, because some of the statements and some of the, topics that I'm going to talk about will give you also headache. And you know what? I took with me a Panadol for the one who really will have a serious headache. So let me introduce myself. My name is Mohamed Daoud. I am a North African French, and I have 20 years banking and finance experience in the US. Thank you. In Europe and in the Middle East. And I have another additional 20 years only in compliance. Okay, so let's talk about what are he talking about, these compliance things. Some story. I asked somebody in the audience when I was in the cafe, do you know FATF? And he said, what? Well, guys, you need to know who is FATF. So let me just tell you what is the FATF. The FATF is the Financial Action Task Force. It is an intergovernmental policy-making body that has been established in 1989 by the G7 in Paris. And in Paris, they start talking about illicit money, drug money, prostitution, mafia, and they needed to have some kind of agreement between the different countries, and they set up this body that will help to fight this illicit money. And this FATF was almost a sleeping beauty, nobody heard about, like many of these United Nations things, until 9/11. Everybody remember what's happened in 9/11? Yes? The US say enough is enough because we already have our embassy has been blown out in Mombasa, in Africa. We start having a serious problem with this terrorism. Starting from now on, we are going to put in place a system that can track every transaction happening in the world, okay? And I can tell you, it was a genius way of doing things, you will see. And therefore, they issued the USA Patriot Act. Do you know the USA Patriot Act? Well, I can tell you what is it. Just after 9/11, if you remember, Bush was going and he went to the United Nations and he said, hey guys, are you with me or are you against me? And okay, and by the way, who will vote, who will not accept to vote that this FATF will have an extension to fight terrorism financing and money laundering, then we consider that he's against the US. So the whole community voted and they agreed that the FATF will now have the mandate to do not only drug and illicit money, but also money laundering and terrorist financing. Very important, terrorist financing. So for the people who don't know what is this USA Patriot Act, when it has been launched, the US, in the US, the intellectual, the reporter, the press was mainly talking about the civil liberty because this law, this act, was giving the authority, the FBI and the security to hack your phone, to come to your house, search without you. They can arrest you and you disappear for a week or two. And moreover, when your name is Mohamed Daoud and you are going to Florida for holidays and you end up in maybe Kennedy Airport in New York, those guys, they can take you, ask you a lot of questions, and after that, they offer you 2 or 3 weeks or 3 months or 3 years or 30 years free of charge, beautiful resort in the Caribbean island. It was called Guantanamo Bay. In addition to that, because you have your suit and they didn't want you to spoil it, they will give you the orange suit if you saw them in the TV. Okay? This is the same type of policy. So, what we are saying is the FATF has been, in 2001, just designated as the watchdog for anti-money laundering, anti-terrorist financing. And the FATF is 39 countries composing the FATF, and the FATF work with the World Bank, the IMF, the OCDE, the European Commission. So therefore, the FATF is not an isolated body. He has a very strong power. Okay. So FATF is organized worldwide as a subgroup. We have MENA FATF. We have the West African FATF. We have the South African FATF. So it's because it's worldwide. And the country are subject to evaluation by the FATF here to make sure. So their role, their main role is to go to a country. They issued 40 recommendations. In reality, there is 49 recommendations because the 40 recommendation was in 1989 by this G7. And then in 2001, they extended and they added 9 recommendations, mainly related to terrorism financing and international cooperation. So they will check the country and they will say, come to the country and say, have you changed your legislation? What do you mean? Yeah, how you want to freeze the asset of a money launderer if your local laws doesn't stipulate that? So their main job was to make sure that the countries, every country and every legislation in the country, in the world, has changed in order to fight money laundering and terrorist financing. And they have a very big power, and you will see what we are talking about. If the country has a serious deficiency, if the country has a weakness of deploying the anti-money laundering, the counter-terrorist financing, the FATF will raise them as jurisdiction under increased monitoring. And you know what does mean this? When you are in the FATF grey list, you are considered as a high risk automatically by European Commission. Do you know how many countries are in the grey list today? We are in one of the countries. UAE, Turkey, Jordan, Pakistan was recently in the grey list, and there are different lists. Doesn't mean that you are not fighting money laundering. It means that you have some deficiency and you are working on, and I can tell you, we are doing a lot of projects as Moody's with the government, and the government is trying to do everything to kill this perception that there is some weakness in some division. If you have a serious and you are not having the willing to implement this policy, you are automatically considered to be in a blacklist. And today, North Korea and Iran are in a blacklist. And the blacklist means you are completely isolated from the international financial centers, the financial services, and from the other countries. And you will have a serious economical problem. Let's talk about, so we are talking about a policy where at the international level, you have the FATF, and automatically backed by the IMF, the World Bank, the Basel, and everything. Very strong power. And then every country has to have a local authority, which is central bank authority for the banking sector, financial market authority for the other financial sector, like the insurance in some countries, and some countries, they have specific authority, and also authority for the non-financial sector. And the FATF called the non-financial sector designated non-financial business and professional, DNFPB, which means that it's a corporate. And every country should have a financial investigation unit. So I can tell you that every country in the world will have a financial investigation unit, and the banks or the corporate or the insurance, if they see that there is a transaction that looks fishy, they have to report it to this FIU, which the FIU for every country get a lot of suspicious report coming from different sectors, and they will do investigation. And this is the guys that are between, example, the banks and the legal system. Because if they found that you have a suspicious transaction and they report you, the FIU, based on the investigation, can decide, go to court, freeze his asset, or put him in the jail, or highlight this risk to different country if he left the country. And as I told you, these are the observer of the FATF. So every time they do an audit of a country, all these guys are aware of what is the status of the audit. So let me just very quickly explain. We say 89, FATF has been created. 90, we have the 40 recommendation for drug and illicit money. 2001 happened. 9/11, US and the terrorist attack of 9/11, the USA Patriot Act, and the USA Patriot Act went to the United Nations and mandate FATF to be the supervision and to be the watchdog. And then after that, from 2001, 2004, there was developing the methodology of evaluating a country. So they came to a country to do auditing. Okay? And then we had the different auditing, which we call mutual evaluation. And the mutual evaluation happened in a different country since then. Example, Saudi Arabia has on 2018, and this is where 2018 we have 20 mutual evaluation of UAE, 21 different country, Egypt. So, and this cycle is almost every 3-4 years. Qatar this year, they are waiting for the report in Qatar. What is the status? Are they doing good? Are they having weakness? Okay, and I give you an example of what was the issue that we have in UAE. The banking system was very, very tough. And when you are doing transaction with your bank, a lot of questions. And sometimes they are blocking your transaction, and sometimes they're giving you a hard time. But when the FATF came, they realized that the real estate sector was doing a lot of cash transaction, and the gold and diamond sector was doing a lot of transaction, cash. And this is against this regulation, because we would like to track where the money is coming, where the money is going, and how this flow of money is happening. So I will go very quickly because I don't have, my time is very limited in this type of presentation, you know. So just to highlight, the FATF went and enforcement sector by sector. They know that the country cannot have all the sector complying. It's impossible. So they went first and they start tackling the large bank, okay, of a country, tier 1, tier 2 banks. And then they shifted to the other one, tier 2, 3 banks, smaller bank. And then the money markets. And then the remittance and insurance company. So every time they were doing an evaluation saying, what about your banking systems? We check the banks. They are doing good. They buy system. They do training. They are very tough in. What about insurance? I say, insurance also? Of course, yes. Oh, okay. Then next year, it will be focusing on insurance. And then when they come and say, banking is okay, insurance are okay, what about remittances? Remittances, money exchanges? Yes. Also? Yeah. Then, and this is how they enforce smaller, the whole country. And they are doing this country by country. And based on that, I can tell you that the next that will be on the radar of the FATF enforcement, they will be coming to countries saying, cryptocurrencies, are you regulating this? Cryptocurrency? We have to? Of course, yes. It's a financial services. Of course, it's based on a lot of speculation, but it is. Now, you are telling me, Mohammed, I'm sorry, but you are saying an international country, yes, a country are pushing for policies. How come? There is something that you need to know. And it's very important to know, because once you know this, you understand the whole logic behind it. a correspondent banking relationship, CBR. A local bank must have a US dollar account in a US bank to be able to trade in the US dollar. So when this policy happened, the US say, listen, the dollar is it's my country. So whatever the dollar transaction is happening in Malaysia, in Algeria, in Kenya, the rules and the system that apply, it is the US regulation. Euro, it will be Euro regulation in any part of the world. So let me just tell you, do you know how many banks in emerging markets are having accounts with a US bank in order to trade in dollar? But imagine how many banks we have in UAE, how many banks are in Malaysia, and in Kenya, and in Lebanon, and in Jordan. All these banks, they have an account in New York State, which is the clearing of the dollar, in order to do any trading. So I'm going to ask you another question. Excuse me, sir. Do you know what's happened if a bank lose their dollar account, which means that the correspondent bank in the US decide to not anymore work with Emirates NBD or Mashreq Bank? They close their dollar account. You know what will happen to the bank?
Some banks in this room actually are familiar with this particular question.
Okay. The bank will close. And do you know how long it will take them to close? Average? 2 months. And we had, in the Middle East, 7 banks that lost their dollar account. So once you understand this concept, then you understand that a bank in UAE, when they have a relationship with Morocco or with the Saudi, they would like to check if they are complying. Otherwise, they cannot work with them. So it's not only dollar. It is euro, it is sterling, it is other countries. So therefore, and I was hearing a lot of things about trade finance. Do you know what is the amount, what is the percentage of the trading worldwide in dollar? 80%, which means that 80% of the trade worldwide are under these regulations. Some customers and some people say, hey, Mohammed, you are exaggerating. So if I don't want to comply, very easy. Don't use the dollar. In fact, don't use any currency, because I am going to show you that if you are a bank and you are having a dollar account, but you have a lot of customers doing only in the local currency, the correspondent bank come and tell you, what is the KYC? How you are onboarding the customer? Are you asking questions? Did you check where is the original of the fund? And he say, oh, excuse me, this have nothing to do with the foreign transaction. This is not dollar related. This is Saudi riyal or dirham. Say, excuse me? Yeah. So you are my partner. We have the same principle. You are telling me that you have the same principle and the same policy than me to do the business with me, and you are telling me that you are not checking the local account where the money is coming from, which means that you can work with terrorists in the local currency without any problem. So this notion of dollar account and only foreign transaction that I am hearing sometimes is not true. It's any transaction, any customer. So you are going to ask, so I'm telling you, I heard the word de-risking, which was a lady talking this morning about compliance and de-risking, which is the banks are giving you a hard time or giving to your customer or the SMEs, because if they see SMEs coming and this SME business is not clear, the director do not want to give a lot of information, they send them a questionnaire not responding, of course, they cannot open an account. And by the way, after this type of policies, you remember when we say FATF will ask change of legislation? The change of legislation in region was, before, we cannot not open an account to a national And after this policy, you can open, not close, you can close an account to a national or anybody who is putting your business at risk, which means that you come, I ask you a lot of questions, I see that your business or your trade finance business is fishy, I will ask to close the account. So therefore, the correspondent bank, every time that you are having a transaction from a remittance, because the remittance company, the money is sleeping in the bank. A brokerage, at the end of the day, the money is in the bank. So whether you are in insurance or you are luxury real estate or whatever, you are putting this bank in high risk. So when you are doing a transaction, sending this good from Dubai to Algeria, this transaction is happening in dollar because the currency are pegged in dollar. Therefore, the transaction automatically is happening in one of the New York bank, and the New York bank can come back to local bank saying, have you checked this company, what they are doing? Have you checked where the money is coming from? Have you checked if the director of the company is not sanctioned? Are you sure that they are not money launderer list? And if this local bank take a little bit more time to respond, they understood that they are not doing any checking. And therefore, the next response is, you close them or I close you. So you have now two pressure. One is coming from the network of the financial banking, and one is coming from the international FATF doing evaluation at the country level. So therefore, before we were saying, the banks will have a lot of headache, but since 2, 3, 4 years, the whole sector are having a headache. So let me just now talk about what is the requirement. Very simple, very, very simple. You heard KYC and QIB this morning. Can you do due diligence and can you apply a principle called know your customers? You are coming customers, I need to know your ID, your nationality, your age, a lot of information about where do you work. Can you give me, you want to open an account? Give me a certificate of your company to say what is your salary. Salary, I can give you a certificate to tell you that I'm working with Moody's. Why you need to know salary? Because I want to know whether your transaction behavior corresponds to what you are earning. Otherwise, where the money is coming from. And this is what we call KYC. Now, QIB, it's because I am doing business with a company, there is a shareholder, there is a director, therefore I am. And you say, Mr. Regulator, so if I get the company information and I do due diligence, I am okay? Not exactly. What do you mean? You need also to know the customer of the customer or the business partner of your customer. What do you mean? Yeah, I am making furniture and I am sending this furniture and selling this furniture to this company. Did you check it? 1 minute, it's not my company, this is the other company. You check it. As a bank, example, if you are doing a money transfer, the bank is not only going to check the customer who is doing the transfer, the bank has to check also who is the beneficiary, even if he's belonging to a foreign bank. Why? Because they might be sending money to money launderer or terrorist financing guy. So this concept of, so therefore, 1 minute. So if I understand, I am working with ICC, and you are asking me to check all the business partner of ICC? Yes. Distributor, agent, subcontractor, all. So we call it in Moody's QIX because it's any counterparty. And it's logic because if I am working with you and you are in gold, I would like to know whether are you screening and checking who are supplying you this gold? Are you sure that this gold is not coming from Nigeria, where we have a problem with the kids working and the slavery, and this is maybe smuggling? Are you sure about that? Are you sure that your distributor is having the same principle than you? I can tell you, I was in a few years speaking at Aramco in Saudi. I was surprised because they put 120 companies. They're all companies? Yes. So what is the message? Very simple. We are going to apply this policy, and we are going to have very critical ethic and principle, anti-corruption, anti-money laundering, anti. So this is you. No. We are going to send this questionnaire to every company. If they have the same principle as us and they commit to the same principle, they can still work with us. Otherwise, we don't need them as subcontractor. And this is compliance. So if I check the ID and the passport and do the KYC and the information and the earning and everything, yes. And what is the next? The next, check if he's not sanctioned. Sanction. You remember the US, when they went to the New York Bank, and now you have to understand, they went to New York Bank and saying, Madam New York Bank, we are going to issue every day a list of bad guys, bad companies, and you should not do business with them. So let me check this list. Oh, there is a lot of Mohammed Dawood, a lot of Futank, okay. This is exotic name, it's fine, yes. I will put a system to check time by time if this is okay. No. You need to do a system to check every day if the account or you have transaction coming with these names. Okay. And when the banks in New York thought they are talking about New York Bank customer, okay, it's normal, makes sense. And then the regulator came. Once this USA Patriot Act has been voted and saying, you remember this list? Yes. Just to clarify one point. How many correspondent bank relationship you have in the world? 1,000. Do you mean you have a lot of banks in Malaysia, in Asia, opening an account with you? Yes. In Algeria? Yes. In Africa? Yes. Latin America? Yes. If one of these foreign banks do any transaction with one of his guy in this list, you lose your license. And this is how the correspondent bank, by default, became the boss of the regional bank. Because they are subleasing or subcontracting the banking business to the bank in UAE or in Malaysia or in Kenya. And they want to make sure that those guys are not doing transaction against the policy. And now we understood the pressure coming from the correspondent, and this is why we are talking about counterparty. So I can tell you, a few years back, the largest, so when you say this, there was a lot of banks closing because they do KYC, they have a backlog, and they start closing what they think customer die or he's not responding or whatever. So assuming that we are talking about dollar, it's logic that the US banks will be doing a lot of closing and automatically de-risking, okay? The second one, can you guess? What are the second currency that you use worldwide? Euro, thank you. So the second one was the bank in Euro, closing exotic bank system here and the cutting tie with African bank with the third one, which one? Big currency. No. The pound. Yes. The fourth one. Can somebody guess? Sorry? Thank you. This is what I was expected with the Japanese. It was a Saudi real. Saudi decided, 1 minute, I have to be clean. So they start doing KYC and checking every single bank that have a relationship with them in Africa, in Middle East, in Asia and everything, and they start, there was the fourth closing country in the world. I don't want to take a risk. I am member of G20, and I am member of the international. Okay. And remember that they were having this problem where the Middle East was having suspicions that we are on the wrong side of the fence because we have a lot of terrorism between bracket risk. So, as I told you, you need to check if some, so 1 minute. So if I screen the customer, and then I screen maybe when I do payment, the screening of the beneficiary, or when I'm receiving money from foreign entity, I am screening who is sending the money because he's not my customer. Yes, I am in compliance. Not exactly. What do you mean? Yeah, I want you to, can you explain? Yeah, we also noticed that a lot of money laundering are happening with people having a power. Government, corruption. So, you have to check if this entity or this guy is not linked to a politician in any of the country in the world. And we call this politically exposed people. And you know what? This is the highest risk in the trade finance, by the way. Okay, so, and then should I do something else, which is, if I do this, I am okay? No, it's good. Of course, no. Because you onboard Mohammed Dawood, you check him today, he's not listed, then I did business with him, I open an account, and I do trading, yes. But who told you that in next 3 months or 6 months he's not listed? Oh, and this is worse because you are doing business with him. So what do you want me to do? I want you to every day, if you are in a dynamic business like banking, to screen every day your existing customers. Oh, wait, but it's going to be millions. No, 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 no. I will let you know how you do it because all the customers are not having the same risk or level of risk. But you have to do it. Do you know how many sanctioned entities, people, companies are every day in the list? Can somebody guess? Every day, new list. The lists are updated every day by the US Department, by the European, by UK, by every day, the sanctioned entities. Do you know how many? Sorry? No, it is around 10,000 with 1,000 minimum in the terrorist financing, which is a lot, 24 hours. So, I have to do a transaction and detection monitoring, which means that my customer, I have to monitor them all the time. So if I do checking at onboarding, and regularly I check the list, and I check who is who, and the business partner, and the third parties, I am okay? Not exactly. For the banking sector, or insurance, or money, any financial services, what do you mean? We still have money launderers, we still have terrorists, and we don't have them in the list. And you need to help us to detect them. How can I do that? Well, this means that the people who are having account and transaction are doing something fishy, but we don't know them. So we cannot give you the list up front. But if you can analyze this transaction and spot and do investigation and report to the FIU, those fishy ones, then they will do investigation and they realize that this Mohammed Dawood is doing this in this remittance company and then changing to the next one and going to the next corner and everything. And by checking that this guy is doing money laundering in the country, we report him to the international bodies, and then in 3 months, he might be in the list. So you are helping us to detect those suspicious guys. And we call this transaction monitoring. So I can tell you in the banking, I'm specialized on that, we implement SPY system. Every single transaction that you're doing are analyzed and checked per your profile. You agree with me that if I can have 5 years or 10 years of your transaction in your bank, I can very well have a profile. Where you are sending money, what is the average, what is it? I can give you very basic transaction monitoring. How come that this customer, whose salary is $1,000 per month, is able to send $10,000 every 3 months? Where the money, once he used the rent, where the money is coming? Either he mistakenly told me I am earning $1,000, but he's making 5, and therefore my KYC is wrong, or something is fishy. So I can tell you that your banks are every day monitoring your transaction and monitoring your transaction of your customer, because now we are talking about trade finance. And all these policies and process has to be implemented in the foundation of ethics, anti-corruption, and anti-bribery. I am sure that if I ask you, do you have, madam, do you work in the company? Okay, good. You have an ethic or business conduct document that tell you our value and what we should do and not do. We agree with me? Every company have a code of conduct or code of ethics. The question here is, are you sure that it is mapped with the standard international? You cannot have your own code of conduct. You have to have the code of conduct that are mapping with your, if you are a bank, with your counterparty banks. If you are a pharmaceutical group, with your pharmaceutical group supplier. Because remember, we need to work with the same principle. So this type of policy have nothing to do with the financial risk. Every time I go to a forum, they are talking about credit risk, fraud, financial risk. This is pure. You call it perception risk. We call it reputation risk. And in fact, it is this, the FATF policy is not Basel II, Basel III, is not to make you making more money. No. It's not to reduce or to save more money. No. It's you are either part of the club or you are not part of the club. And I used to say, you know what? You can play golf and you are very famous and you buy those Nike shoes that some people are paying $100,000 for shoes. You know that. Okay. And you go, I would like to play golf. Excuse me, the shoes, you have to change them. No, but this is Nike, $100,000. It's unique. Sorry. You either have to put the shoes of the club, because this is the rule of the club, or you are out. Do you understand this concept? Part of the club. And therefore, what you are doing, you are mainly checking. The requirement is to do checking. So let me elaborate here. This is your system, your operation system, your ERP, your core banking, whatever, where you are having your internal customer database, your company that you are working with and everything, okay? And you might be compliance, you might be investigation, you might be procurement. And when you are onboarding customer, you need to check this customer name against something that are in external data provider where there is a company information and sanctions. If you are working with a company, you need to know who is this director, Who is this shareholder? What is his percentage? If he's linked to any sanction entity, if this company have a shareholder in another country, that is a red flag. This is what you have to do, whether you are a corporate or you are a financial institution. And this data are updated every day. Every day. This is external data that the banks are subscribing to, or big corporate are subscribing to. And I can tell you, Moody's, we have these two data updated every day. Sanction. There are different sanctions, and I'm going to go very, very quickly. You have the sanctions which are political sanctions. You have the sanctions that are coming from law enforcement. You know, somebody he did a fraud, he went to central bank, or the SEC, or the Tadawul, he went to court, and he has been sanctioned. And you have sanctions that has been decided by the central bank or the regulator. This type of sanction, you can find them as in a public access, which means that you Google. Can somebody tell me what is the name of the US sanction? Name? Thank you. So I recommend you to say, if you want to only check one list, only one list, this is the list that you should never forget. Now, if you want to comply with the international regulation, then you have to screen and to check a different list. And my question to you is, why you need Moody's or another provider to give you this data if this data is accessible through Google? Do you know why? Very simple. US, they have their own policy, their own technology, their own data scheme, their own description. And Swiss, they have their own system, their own thing. So you have Dawood there, and you are not sure whether it is the same because the descriptions are different. And because there are around 300 lists, then it's impossible for you to make sense of them. And this is why you need a provider that are consolidating, deduplicating, and cleaning the data in the middle, and consolidating the standardization of data. Whether you look to the Swiss data or the sanction from UK or European or Japan or Canada, they look exactly the same with the same description. So this is how most of the institutions are accessing to this type of data. And then, you remember politically exposed? This data is private. Only a private provider can provide you this data. Adverse media, the same thing. Clarification on adverse media. Every time there is we have a committee, ethic and compliance committee. Every time that somebody is mentioned 3 times in 3 reputable media, and this reputable media is defined by the committee of compliance, who they are, we pick up this information and we store it. So when you want to do business, depending on the risk is high, and suppose the risk is high and the reputation is high, you screen Mohammed Dawood. He's not sanctioned. Oh, okay. You check, he's not PEP. Okay. Let's do business with. Then 1 minute. Maybe you need to check if he has any article talking about him, that he was involved in this fraud and this fraud, and maybe he's going to go to court in the next 6 months, and so on. So depending on the investigation you are doing, you might be accessing to adverse media. So, and depending on the sector, typical asset management, very, type of business that have international exposure, they will do, I give you an example. There is a lot of public agency that they allow foreign company to establish in UAE. This is typically where they do this type of investigation. Not only sanction, they will check sanction, PEP. Okay, and the last one, company information, who is the UBO mean ultimate beneficiary owners. I can tell you, recently, the last year, US has extended very big sanction to Russia against Ukraine because the war in Ukraine. Then I can tell you there was a lot of oligarch linked to the sanction of the US that have companies in the region, and they were the ownership, or they have 25% of the ownership of company, and many banks didn't know that. So it's very important to go and to check this, that who is the owner and who is the owner of the owner and which country. Maybe he's linked to Malta and Malta company are having a link to, or, you know, you need to, in general, you have to do it because remember when you are onboarding companies, you are doing a lot of due diligence. You are not doing that. You are not opening an account for a company in 2 minutes. We were talking about trade finance. This list includes any airports, any aircraft, any seaport, any vessel, any tanker that are sanctioned. And there are many. And in the trade-based money laundering, I saw you this morning, very nice solution. The problem is most of the banks, they don't have problem with the trade finance solution. Many of them, they have a good solution. Their problem is they don't have the compliance part, the technology that help them, which is the headache. This is the main headache that many institutions are having. Because in the trade-based money laundering and the trading, you understand that you have the customer who is exporting, you have the importer, you have the agent in the middle, you have a different intermediary, you have the tanker, you have the transborder, the port, and all those can be sanctioned. So you really have to be very careful. In addition to that, in the trade-based money laundering, the US are asking companies to check what we call the dual goods. You know what is the dual goods? Very simple. Mohammed Dawood is established in Dubai, and he's exporting in one of the CIS country a very hand-up technology. And this technology is considered by US as dual goods, which means that our component can be used in military. I can tell you, very simple. Recently, when they discovered some drone sold by Iran, they realized in some of the drone that they capture, they have Texas Instruments ships, part of the drone, which means that somebody is selling to a sanctioned country a good that was sanctioned by the US. And you might have facilitated this trading because you have been involved either as a bank in this transaction or as an agent, trading or
yeah. Mohammed, sorry, it's just so brilliant, but we'll have to wrap it up in about 5 minutes or so. Make it summary.
So you see,
yeah.
This presentation, I need 3 hours.
We could listen to you all day.
No, but I'm going to go very quickly. So you understand the principle. I talk with politically exposed people. You understand that? But it's not enough. Because the General X who is coming from Nigeria or Algeria, he's very rarely coming to do business with you. He will send his girlfriend. He will send his driver. He will send his associate or body. So in this database, for any politician, there are around 50 people listed around. So when you are capturing transaction and you put Mohammed Dawood, the system tells you Mohammed Dawood is not listed. However, he has a direct link with this general or this president in this country, or he's the father-in-law, or he's the brother of this minister. And we are not asking you to stop the transaction. We are asking you to monitor this transaction. And you need to check whether he's a PEP or relative or associate. We just talk about it. So everything here in this business, we call this the intelligence between the link. We call entity resolution. When I'm doing investigation in this transaction, I am doing the investigation transaction and what is the link with this guy in this country, is it high jurisdiction and so on. And this is a summary. Normally, until recently, until 2018, I would say, the people was focusing only on sanction and adverse media and doing the different sanction list. And then recently, these 3 years, the requirements are on company information. Who is this company? Who is behind it? Are you sure that the shareholder of this company is the right one? Is not the shell company? And therefore, compliance, procurement, a lot of procurement use this type of database to do when you are doing business with the companies, a third party. Okay? And I told you, this is typically the type of solution architecture. You remember? Level 1, your system, your operation system. And the level 3 is the data, the updated every day. This is the sanction data, external data, whether it's company information or sanction or politically exposed. And in the middle, you have this technology. And we are recommending that this is the technology that integrate with your trade finance system or your banking system or your ERP system for a company that do the detection and help you to detect with whom you are doing the business. And just a last word, you will be hearing a lot of risk-based approach, RBA, when we are talking compliance, because if you are a bank and you have 1 million customers, you remember transaction monitoring? It's impossible that you are monitoring 1 million customers. And the regulator is asking you, no, why don't you classify your customer by risk? Minimum, high, low, medium. High, I can tell you, somebody from high jurisdiction, high risky country, you put it high. Somebody from local, it's low, it makes sense. And medium, maybe he's in the sector where you consider, you can consider that furniture is a low risk, gold and diamond is high risk. This is, and I finish. Believe me, don't confuse the compliance risk with the financial risk. As we say, and I just highlighted to you, when you are talking about finance, Basel II, credit risk, operation for fraud, it is your ass. You are losing money and you can control it. You can decide to mitigate your risk by putting a lot of provision, but this risk is the perception that the external entities in the country are about you. A pharmaceutical group in Egypt lost totally the business because they were distributing pharmaceutical. They have a big distributor because the German supplier asked them if they are compliant and they were not compliant. So they said, I don't want to work with you because remember, I want to work with you if you have the same principle, if you are part of the club. So this is what we call it a reputational risk. And last word, I used to say, if you take a company or an organization, like a country, and you decide that you have a head of risk, you know, most institutions have head of risk. What will be as a country? He will be the Ministry of Defense. Okay? The head of audit, he will be the Ministry of Homeland Policy. Yeah, the Interior. Based on this analogy, what will be the role of the compliance head? Remember, your risk external, how we are perceived. You are pleasing your counterparty. We are part of the club. Thank you, sir. It's exactly that. The compliance head is the ambassador, is the foreign affair. The compliance risk is not within the country. It is outside the country. Thank you very much.
Thank you very, very much, Mohammed. You know,
I think...
Mohammed, that was really, really brilliant. And I think just when you were starting, everyone had a thought in their mind, how is he going to follow Dr. Christopher? It's absolutely impossible. But you did. You were absolutely brilliant. We could listen to you all day long.
Pleasure.
And so we will be working together in developing, I think, some training, some ongoing support.
Anytime.
And it's our great honor to have you. So could we give him another round of applause? It was just incredible.
Thank you.
Incredible. So we're going to go for lunch, and you'll have a little bit more than an hour. We're behind schedule a bit, but you must admit it's been worth it. Dr. Christopher Mohammed Daoud. So please be back at 2:30. That's 1 hour and 10 minutes. And please do me a big favor. Please be in the room at 2:30 because we've really good sessions coming up in the afternoon. So please be in the room at 2:30. So enjoy your lunch. And by the way, I have important announcements regarding the prize draw for the conference and also for the Museum of the Future when you come back and the gala dinner. So if you're not in the room, you won't hear, and I'm not going to tell you, okay? So you need to be here at 2:30. So enjoy your lunch and see you later. Same place, out the door, turn left, Sheraton Inn, left, food. escape. That's it. Come forward. Yeah. Wonderful. Okay, we're going to start in about 30 seconds. Excellent. Please come forward. Keep coming. Keep coming. As you know, the seats at the back are economy seats. The seats at the front here, the back 2 rows, these are business class seats. And the seats at the very front, they're the first class. And I see you snuck into the first class seat while I wasn't looking at you, Mr. Hussein. I keep an eye on you anymore, you know, in future. Okay. Okay, everyone, let's take our seats. We've had a very engaging morning. And I hope your lunch has you now all sustained, because now we're looking at 2023, the year of sustainability. And Kamal Malahi, who works in the Center of Responsible Business in Dubai Chamber. Kamal, over to you too, and your panel. I think they can all come up on stage, and you can lead it. And yeah, please come on stage. Please come on stage. And after this panel, I'll be making important announcements about the logistics tonight, about the Museum of the Future, and about buses. So after this very important panel, because everyone is asking me, but just after the panel, I will disclose all.
Please.
Thank you so much.
Hi, good afternoon, and thank you all for coming. It is, yes, Year of Sustainability. It's COP28 here in the UAE, and it's 2 o'clock on Thursday afternoon, so thank you all for staying with us. We have a wonderful panel here with us to do. Just as before I introduce the panelists, I want to just tell you the structure of the panel today. We're going to have a presentation for about 10 minutes to set the scene for the topic of today. Then we will have 30 minutes for questions and answers, and then we have concluding remarks. But before the concluding remarks, I'll open the floor for questions if you have some questions. So we have 45 minutes for this panel. As I said, it's a pleasure to have this panelist today, and we have on the far side, I think if you are from the UAE, she needs no introduction. But for those of you coming from outside the UAE, let me introduce. She is a pillar of CSR sustainability in the UAE. Actually, she is part of the fabric of CSR. So let me introduce Habiba Al-Marashi, President of Arabia CSR Network, the co-founder of and chairperson of Emirates Environment Group, and co-founder of Emirates Building Council. And I'll stop here. Otherwise, we're going to spend a lot of time here. Welcome, Habiba. Thank you. And we have on the middle, Ashish Gokal, and he's Strategic Marketing and Communication, National Bank of Fujairah. And near me here is Sinath Kijavan, and he is Advisor to Trade Assets. So welcome the panelists in the normal way. If we could just welcome and warm ourselves and wake ourselves up. As I said, we will open with Habiba for about 10 minutes to introduce the topic, and the topic today is going to be, I'm not going to surprise you, ESG. ESG. Then we take from this overview of ESG into trade and finance, and then we have a concluding remarks. Habiba, over to you. Thank you. Yeah, of course you can.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I would like to tell you a journey, a story of my connection with Dubai Chamber. I started my working professional life in the Federal Chamber of Commerce in 1983. As a very young UAE national coming from abroad, and I got immediately the job in the Federal Chamber of Commerce. My interactions with the 7 chambers was on a daily basis. My mentors were the presidents and the director generals of the Dubai Chamber of Commerce. So for 13 years, I was exposed to the business world, and I listened to the best. I always say they don't make like them anymore. Those presidents of the chambers of commerce were really giants in their fields. They had the knowledge, not by going to universities. They had very hard-earned knowledge by experience, and they had that passion to move the country forward and to build it. So I was literally adopted by them, and it helped me a lot in my future endeavors. So I did my first beautiful evening program in this chamber in 1998, when the country celebrated the first National Environment Day on 4th of February, with hundreds of students in this auditorium. So this place has a very special place in my heart. I had to share that story with you. Now we come to current and present, and where are we and what do we do? My journey in the sustainability field started in 1991, when I established the Emirates Environmental Group with colleagues and friends and some people we didn't even know, but we were people from different nationalities in 1991. So for 10 years, I was juggling two responsibilities: my professional in the corporate world and my voluntary work at the Emirates Environmental Group. And it pushed. Really, when you open the door of environmental work and environmental sustainability, you will be amazed at the opportunities, at the knowledge, at the expertise that you will see in your life and in your journey, and the wonderful human beings and the amount of knowledge that is out there to be shared, and the opportunities that you have to bring that knowledge to your country and to ensure that it adds value to the overall development of our country. And this is exactly what I did from 1991 until today. The topic that has been chosen today is a very timely topic. I want to shed light today on this trend that is coming up all over the world, particularly so in our country and the region: ESG, ESG, ESG. What is it really? You know, and why it has become so important, and is it the solution for all our issues? And if entities implement ESG, will that make them the most advanced and most developed, and their house will be completely in order, or it is not? So this is what I will try to set the tone for. Let's look at the year 2020. I will not go beyond. What did we witness apart from the COVID pandemic? We saw extreme flooding in China, India, Pakistan. We saw record-sized fires, wildfires in Australia, US, Romania, Portugal, Spain, Italy. We saw windstorms and hurricanes in UK, landslides in Germany, volcanic eruptions in the Philippines, different freak weather patterns across Asia, and the hurricane season broke records and affected millions and millions of lives of people around the Atlantic. There was a heat wave that hit Canada. At least 23 countries recorded the highest temperatures that they have ever seen, that has recorded in their history since they started recording, above 50 degrees centigrade. The Antarctica completely was melting down and recorded record-breaking high temperatures as well. Earthquakes, political crisis, all ravaged Haiti as well. It showed us how we as a human species are not prepared at all to deal with multiple catastrophes, challenges that are out there. Research shows us that the top 10 of weather-related issues and events, really the cost of those was more than $140 billion US. While the other events that I mentioned, the total cost came to more than $2 trillion US. I did not even mention the loss of thousands of lives in all this. You come now to the global warming and climate change, and what are the gases that are responsible for that. We are focusing on CO2 emission, but is it the only gas that is there? And what about the others, and what is the role? Look at methane, for example. It is linked to 25% of the global warming and has been shown that it is increasing at a very, very rapid pace around the globe. Sea levels are rising to a level that we have not seen before. And this has, again, shed light and focused the light actually on how ill-equipped we are to deal with these kind of challenges. But these are not things that happen and they will not happen. Again, these are khalas, recurring. They are here to stay and they will become worse and more rapid and more drastic and bigger. So this then brings in the issue of ESG. Definitely ESG can help in this situation. It will link the different activities. So if you want to understand how to deal with challenges, you will need to look into more about ESG, how to invest in there, and what you can really do, and how much of it can you implement it, and is it just a ticking parts, or is it something more? Why do the business world suddenly woke up to the issue of ESG? Because they were seen, before they were seen of secondary importance. Why suddenly the interest in this? Because they are seeing a very strong factor in investment and tackling the issues of customers and in tackling the issues of employees. We are seeing the millennials are thinking twice about where to invest. They are looking at entities that have strong ESG policies. And since we are in the era of technology, everything is available online, just go in and see. If any company is rolling out any new IPOs or anything, the companies, the first thing they do, the investors, the interested people that want to invest, that want to buy, what is the history of this organization? So the research that was done showed that 70% of these entities, of these people, are interested to invest in entities that have a solid ESG structure in place. So it has become a crucial part. It has become a trending terminology amongst the corporate world. It has become a requirement that governments are slowly but surely incorporating it into their legal requirements and mandates. So here I would like to tackle these points. We all agree, many companies now know that they cannot afford not to have ESG strategy in place, or a policy at least in place, and do some sort of work on there. You may think they are doing so because they want their businesses to be more resilient, particularly after seeing what happened during COVID, and how prone their entities were, their strategies were to failure. And they wanted to ensure as well that they are investing their money in the right place and the appropriate areas. We may also agree that this is so we can all benefit from investing solely in things that we want to see changing in our world. But it should really go further, and it should address the core of our lives and the lives of those that work with us, coexist with us, and benefit and are impacted by our work. Any company today, when you are looking at their societal impact, it's diverse and it is extensive. This could be, and when you look at it, it can be as basic as how we deal with our consumers and how we support local development, but the social effect goes beyond that, and it is beyond the immediate environment. It is not only how important you deal with your internal employees. It is not how you deal only with your customers. It is how you deal with general society at large. So we look at these issues very seriously. Many entities I notice in the UAE particularly have a good grasp and understanding on environmental angles, and they work. And we have reached a good level as well of maturity in our legal system to deal with environmental requirements. but we are still lagging behind in other areas. Understanding the importance of environment factor is a very important part, and this is a good start for us to understand how to change our procedures, policies, programs, processes that goes into our operations, and how do we understand the consumption of our resources, where do we source out these resources. Water issue is an issue that has got good attention in the United Arab Emirates, understanding the government has pulled its force as well behind it. We have now smart metering in quite a few areas. Entities are encouraged, there are incentives. So these are all important things that are nicely coming into place and contributing to the overall scenario. I hope that I am addressing an audience that all have something to do with ESG and they're working on evolving that and keeping that in mind and ensuring that they have the right strategies in place. But if you are expecting that the ESG is that miracle and magic wand that when you put it in your organization, all your challenges and all your shortcomings and everything else will be solved, then I must say that, I'll have to disappoint you. It is not. But it is a beginning of that miracle. Once you have it and once you take it seriously and there's commitment from the top management and it has cascaded everywhere to the top, to the all levels, and you understand and you have put different strategies in place and you understand all that is requirement, then this becomes an effective tool as well. Let's look at the finances of that. What are the funds that are there? What are the entities that are working on there? There are 2,900 ESG funds around the world with the assets of 2.7 trillion. This is what research says. So tracking and measuring ESG pledges and performance remains uneven between different regions, even within a country, but it is building the momentum, and it is some are calling for unification of systems and all that. I would like to share with you a study by MIT School of Management. They say that the absence of consistency on ESG rating is contributing to aggregate misunderstanding, and which necessitates that paying more attention to how the information supporting ESG rating is produced. We have seen around the world, they are nicely coming out, different voluntary reporting frameworks and being used by businesses, some of them more so, some of them building a global recognition, but that there is nothing that to say, okay, this is the best platform that is out there to be used. And it is very difficult to put together and compare apples to apples. And this is where it is confusing a lot of the players out there. Having all these kind of understanding, unified understanding, uniform understanding of what needs to be done, having the baseline understood and implemented will help a lot in expediting this process, because it will help you to avoid greenwashing. And I strongly advise you that should not be the issue of just ticking the points. Because once you lose credibility with your clients, with your stakeholders, it is a very costly exercise to bring it back. And even if you manage to bring some of it, you will not be able to bring it all. So we need to have this understood, and we need to have to ensure that there is a very strong ethical component behind it and genuine long-term interest in there. I don't mean social media, I mean social medium. Okay, let's look at the S part of it, of the whole ESG. As I mentioned, the environmental part of it is quite good in this region. Now let's look at the social part of it. Even the governance, having beautiful procedures of fighting corruption, of having whistleblowing systems, of ensuring the anonymity, of safety of the people who come to weed out the corruption that is out there. We have done good. There's a lot of good work that is happening. There are a lot of recognition. I know that from the Arabia CSR Awards, which is one of the awards that I rolled out in 2008, and I'm very proud of the progress and growth and impact that it has had on the Arab region. But really, it is time for us to look at the S. And when we look at the social, we do not mean just your employees internally, that is doable. You will put procedures, you will put the benefits for them, growth trajectory, leaves, pensions, health insurance, and so on. But what about the society at large? How is your business involved in there? Do you really need to be saying, oh, I have to be a multinational with so much budget with thousands of employees, then I can be an effective S player in my country or in the region that I exercise? Not necessarily. I would like to give you an example of a company I saw in Sudan. Please give me the time, Kamil. I know I'm taking my time.
But we're pressed for time.
Yes.
I have to remind you.
So this company produces flour. They produce flour. It's a wholesale. They sell it to the bakeries in the country, particularly in the capital. Okay? They know their flour is very good from clean sources, from very reputable organizations and all that. Then they say, okay, what about the villages? What do we do with the villages? This is a society at large. Why is our customer base only in the cities? What did they start doing? They started adding nutrients in the flour that they sell to the villages because they knew the children in the villages suffer from malnutrition. There was no law that required it from them. There was no specification that asked them to do that. It is the responsibility, is that social, is the S within their ESG that was important for them. They started adding the nutrients into the flour that they were selling to the villages so that the children can have a nutritional meal. They went another step. How do they build the capacity of the ladies in the villages so that it helps uplift the families from poverty and destabilization? They created mobile bakeries. These mobile bakeries will visit the villages, will teach the women how to bake pastries, cake, and everything, to enable them with skills that they would be able to sell their products. Selling products means extra finances coming to the family. It means more stability to the family. If the husband is working in the farm and the woman is working at home, it means the children could go to school. So do you see the impact, the long term? These are not issues that you can see it overnight, and neither should entities be looking at quick turn at all the time, quick return, quick return. You have to have short term, medium term, and long term. This is when you build your capacity and you build your reputation and you are functioning for 150 years and you are looking of how to develop another 150 years. So this is the importance of the social, the S. Once you meet the society halfway, the society will never disappoint you, will exceed you, will help you continue your journey and will help you sustain yourself and be in business long term. So really, ESG should not be just about reporting. It should not be. It should be a vehicle of driving change in our countries, in our societies. Each one of you is running a business, I hope, and I'm sure you are involved in organizations. Take this close and work on it conscientiously. It's a very historic year that we are in, not only because the country is hosting COP28, but because it is called the Year of Sustainability, it continuing the legacy of the founder of the nation. What does it mean, Year of Sustainability? It means that we are rolling out long-term strategies for anyone who says, who has taken UAE as a base, as a country, as a home, and looking at how do we reach to 2071, our centennial. We will not be here, but we have put our legacy behind. We have put our roots deeper to ensure that our children and our grandchildren will have the future that we aspire them to have. That is what ESG should be doing for you. So yes, I understand you all want to have the short term. By all means, do have short term. But don't be naive to think that only short term will take you where you want. You have to have all those others. I would like to share with you this quickly. research that was done by Deloitte, you can see what extents they asked more than 2,000 C-suite, executives of where do they see, what is the challenge, what is pushing the ESG in their organizations, and this is in front of you. Again, as you know, you need to look at it remotely, you need to look at it internally, you need to look at it externally as well. And you need to work and collaborate, you need to build the bridges, you need to build affiliations and partnerships and cross-border, cross-entities, cross-sectors, and that is where you will ensure that, because not every entity has got all the technical skills, all the capacity, all the tools required to be an effective player. But if you keep on plugging in together with other entities who have things, this is where you are maximizing the benefit and where you are having win-win situation for all. So you can ask yourselves, is your entity ESG ready? And this is a research that was again done by Deloitte, and you can see the result in front of you. And I'm sorry, Kamil, if I have taken more than what I'm supposed to take. Thank you very much.
It's a pleasure. Thank you very, very, very much. It's always a pleasure listening to you. Thank you, Habiba, for very, very informative presentation. And I think it sets the scene for the questions I'm going to ask to my fellow panelists. And we want to take this broad overview and call for action, and also some kind of, not to perhaps be cautious about labels like ESG, that is panacea. It's a magic bullet that solves all the problems. I really like that. It is something that has to be taken as an addition to what we already do. But thank you for highlighting all those. So I just want now to go to my panelists and start digging deeper. And I start with you, Srinash. You're just next to me, so I have to start with you. Sure. And we've heard about ESG, and now it's a talk of the moment. And organizations around the world, they're scrambling to learn how to actually do the measurement and the reporting, and also use ESG to understand what is material risk and opportunities to them. And I start with you. What does ESG mean to you and in your line of business?
ESG, to me personally, I can best illustrate it with an example. When you're invited for a traditional South Indian meal, you're asked to sit on the floor cross-legged. A banana leaf is placed in front of you, and that serves as your plate. If you're served anything in the form of soup, it is a construction of stitched leaves. No spoons, you use your fingers. And after you're done, that used banana leaf either serves as some form of manure, it goes into the soil, regenerates, or it serves as food for livestock, and I'm rewarded with milk. So that's an example of what I would say is environmentally responsible and an example of the circular economy. So ESG as such to me is a very ancient concept. We might have forgotten about it because the single-minded pursuit of profit following the Industrial Revolution has brought us to where we are today. And nature has lost its patience. Nature is signaling that enough is enough. And we need to remind ourselves about the world we're leaving behind for those who follow us. So E for environmentally responsible, S for socially equitable. And as far as the G is concerned, be self-disciplined. So a bottom-up approach and a top-down approach is probably what is required.
Thank you very much. Very wise words. I've attended so many sessions on ESG, but never had this example of describing ESG lively. Actually, if I didn't have lunch, I would have been very hungry to hear it, but that's very good when you bring ESG and circular economy together. Thanks for that very, very actually visual way of describing it. I go to Ashish, and if I may, what is ESG in your line of business and how are you implementing it in your organization? I understand your ESG report published today or yesterday?
Yeah, just today.
Today.
Congratulations. Okay. Thank you. So just first a caveat, my hairline might indicate that I'm a veteran, but I'm just new, I'm not a climate scientist. So actually I have come from trade finance and transaction banking. So just for the last 1 year, I have been looking at the ESG strategy and the sustainable finance framework for National Bank of Fujairah. So what I'm going to say is based on my experience, the mistakes I have made, and what I have learned as I have gone through. So the first thing which struck me when I came into this line was the complete, what they call the alphabet soup. There are so many frameworks, so many GRI, SASB, TCF, so everything just confuses you. So that is what I think she mentioned about lack of standardization. But having said that, so as a bank, what we have done is there are two ways you look at ESG when it comes to a bank or any financial institution, you might say. One is what you say, financing the green, which is the obvious. So you fund industries or companies which are into green, green renewables, etc. The other important part is also what they say is greening the finance. So it is not only about looking at funding industries which are green in nature, it is also embedding ESG into your existing process. For example, even when we lend a facility to a client, do we measure the ESG risks of the client? Now, measuring the ESG risk of a client is not only just from an ethical perspective that it's from a returns or just publishing in the ESG report. These are genuine risks. So when I evaluate a client, I need to look at whether his factory is exposed to any physical risk because of climate change. Is it, for example, located near in a coastal area which might be subject to rising water levels in the future? So these are genuine risks which affect the portfolio in the long term. So these are the things I have to evaluate. When I look at social aspect, I have to look at is the client in an industry which may be susceptible to fines or negative externalities, what they call water pollution, reputational risks. So those are anything which impacts the client, impacts my facility to the client. So how do you integrate these things in this assessment of a client? Second, when I procure, how am I evaluating my suppliers on their ESG assessment? And mind you, I think we have looked at a lot, Habiba has spoken a lot about why we need to do climate action, why the urgency about it. But one important thing, maybe as a banker and as a businessman, which I would like to highlight, is ESG, we might call it a hype or a buzzword, but it is a genuine socio-demographic change which will impact every aspect of the business going forward. So the faster organizations realize that ESG is not something which is done by maybe the CSO or one team sitting somewhere, it affects your customers. Talk to any teenager around you, you will see the passion which they speak on this topic. So they are your future customers. They are your future employees. There is enough research to show that employees value organizations which show action around sustainability. So it affects your employees, it affects your suppliers. If as a bank, it affects my genuine business risks. These are the risks which I measure. It is a genuine need. There is enough data to show the amount of investment which the government and which there is expectation the private enterprise will make into companies, into renewable or into these emerging technologies. So that is also an opportunity for the bank because genuinely the funding will be required in this space. So are my RMs trained enough to source this business? Is my credit ready to assess this business? Because the risks, the way the cash flows come, the returns you measure is completely different. So that has been my learning. So ESG is not something just, it might be in the short term, you may say a hype or a buzzword, but in the medium and long term, this is genuinely something like, I give an example, what digitalization maybe was 10, 15 years back, or something which is done by the technology team, but now it is business. That is what I feel ESG will happen.
Oh, thank you so much for that elaboration. If I may just add to this, I think a few years back we used to hear that about ESG. It has been with us for a while. It was maybe an add-on, but now it's qualifier for business. And we talked to a lot of businesses that they're maybe because they're not ESG ready and they're losing business because of that. You are part of a network of suppliers, and now the big players are required, because they have to report on their scope 3, they're required to really requiring you to report on your ESG requirements. So it is a qualifier for a lot of businesses. There are issues that I was going to push back and say, what would you say to those organizations when we talk about climate change and flooding and things that, well, that's not material to me, and therefore ESG is not relevant to me. So what's the answer? Because there is a segment of businesses we can see from research that still say, it's ESG what is material to you. They say that's not material to me, at least in the medium term. So what would be the answer to this group of businesses or business people that they still think ESG maybe is not material anymore? Or not, and we are seeing a pushback against ESG in some corners of the world. Yes, please.
My simple answer to that is to make it personal. There's this insidious question, what's in it for me? And there has to be an answer to that question to convince more and more people. But at the end of the day, we are in such a desperate state today, the world, that we don't have the time or the luxury to cajole. I would take a leaf out of what the banks have done in regard to financial crime compliance. And the penalties of not being compliant are severe. And so enforcement at a government level, enforcement at an institutional level, setting the tone from the top, making it something that matters to them as an individual. Just to take an example, I teach a course on financial crime compliance to one of the banks, international banks. And one of the points I attempt to make is you don't dot the I's and cross the T's while you're in the bank at work. When you leave the bank and you're on your way home, or you're spending time or your own time during the weekend, please don't download music without paying the IPR. Don't try and buy fake branded luxury items because it looks good, but it's cheap. So carry that forward, that same attitude in your private life as you would in your public life or in your official life. So again, it comes back to bottom up and top down. That's probably the quickest answer I can give you within the time that's available.
Thank you so much for that. Ashish, would you like to add to that?
Yeah, so I just gave an example of, I mean, to be honest, I thought the same way a year back. Before I came into this, why I'm from trade finance, so why should I be doing ESG, or the genuine now, as I said, as you go deeper and deeper, ESG is something, as I said, at a fundamental level, it is a socio-demographic change. It will affect your business in the short term, medium term, definitely in the long term. I don't see any business which will not get affected. So recently I met a chief sustainability officer. I was just having a coffee with her. I was kind of confused, what is your role? She said, Ashish, the way I see my role is to make my job redundant. So the day business thinks sustainability is their job, it's something which every part of the business feels needs to be embedded, that is the day when the job is over. So again, she was giving me an example. Sustainability, many times in the beginning, people see it as a threat, as a risk, as maybe a regulation. It is a genuine opportunity. Example, you look at when we talked about sustainability reporting, scope 1. In our organization, I had to go into nitty-gritties to look at our power consumption, because when we came out with our first sustainability report, we had to look at power consumption across our branches. You have to report 3 years power consumption. You have to report water consumption. You see genuine opportunities which you might have missed out. So sustainability equates to efficiency. You talk to any chief sustainability officer, there is a dirham value to the projects which you might want to, you might label it in the name of ESG. You might say it's saving plastic, it's saving water, but that translates to efficiency. So it's a change which is affecting your customers. I mean, I told you, talk to any teenager today, they are your future customers. Look at the passion. So you might look at banking products, you look at investment products, look at apparel, the way it's changed in the last couple of years. Everywhere you go now, there is a sustainable clothing line. So today it might be perceived as a niche segment, but 5 to 10 years down the line, that might be a hygiene. So any apparel manufacturer who thinks that, oh, it's not in for me, might just be swept out of the business. So it is that is why I would push back to look at it from all aspects of the business, not just the separate aspect.
Excellent. I was playing the devil's advocate just in case. I don't prescribe that view. And just stay with you. I think for the ESG, we know there are a lot of challenges and barriers, and I think we've seen them in the presentations. From your experience, what are the challenges that your organizations like yours, are facing implementing ESG? Can I just maybe come back for the answers? So I'll start with Ashish just for the challenges. How do you overcome that?
I mean, there are lack of standards. So there are different standards of reporting. So all that is there. It will evolve in a period of time. The biggest challenge which or as an organization we face is what I mentioned is culture. How do I convince maybe the people from HR, people from operations that this is not something just it's about me. It is about them. It is something that is going to impact them. Second is data collection. If I come to the specifics part, reporting, the kind of data which I had to go and dig into is something which I think the organization has never looked at. What is our water consumption per employee, to convert it into CO2 tons equivalent, then which factor to use. There are 10 different factors. For power, there is one factor. So data is a huge challenge. And what happens is many times organizations get bogged down in the data part and lose the spirit of the bigger picture. So none of the frameworks are too tight. The incentive is to at least take that first step in reporting. You might have imperfect data, you might not have data, you might approximate the data. So the models, the frameworks allow you to restate them year after year if you notice something going around. So data requirement is definitely a challenge, but the frameworks are flexible enough to allow you to make that mistakes, fall, trip over, and get up again. So data, culture, and I find the multitude of frameworks, those 2-3 are the challenges which I personally faced.
Thank you. So data, culture, or mindset side organization, and multiple frameworks. I think that's very wise. I'll come back to you, Srinath. So what could make the implementation adoption of ESG easy? How do we overcome these challenges?
Let me limit my answer to the trade finance field. One is digitalization. I think is helping the cause. I myself, when you introduced me, I advise trade assets. And what we're attempting to do is bring banks together and operate in a new way, a digital medium to connect with other banks and to search for opportunities, which previously would be done in a far more inefficient way, which would include the generation of air miles and time and resources being spent. Trade finance, for trade finance, it's a business opportunity, this movement, the ESG movement. And it is an opportunity where other types of funding can be replaced by even what we refer to as traditional documentary products. For example, a lot of trade is financed using loans and overdrafts. You can shift to letters of credit, you can shift to documentary collections, you can shift to supply chain finance. So there are ready-made solutions that are already well established, working very well, and it then gives the visibility for the bank. A figure was mentioned, I think it was yesterday, that 80% of emissions comes from supply chains. So banks, on their part, would be making an extra effort to understand their customer supply chains and where the damaging output is occurring and find ways and means to incentivize customers to act ethically and not be purely driven by profits. Because at the end of the day, there's a performance risk which coagulates into credit risk. So if there are ESG-related adverse events that could prevent performance under contracts, I don't know how much of that could go as force majeure, that the lawyers would be in a better position to decide. But we need fewer disruptions, we need fewer challenges to supply chains. And businesses, I know for a fact, are actually making active efforts to be very environmentally conscious and socially equitable in order to fit in with what is considered good corporate behavior. So I think more of that needs to be advertised. In Singapore itself, there is a green plan which very clearly lays out what's expected of society at large at an individual and a community level. As far as corporates are concerned, there's a very clearly laid out guideline on SGX reporting, on ESG reporting for SGX, that's the Singapore Stock Exchange companies. So there is sufficient guidance already out there, and if we can combine it with some of the other things that I talked about earlier, then I think we can gain some momentum.
Thank you very, very much. I just want to follow with the same final point, Ashish, if I may. So how do you see this ESG in the banking sector influencing the investment and how banks are lending and buying equity in organization? How is it going to change the business landscape? You talk about green finance. Can you elaborate more about that? And what's the aim of the banks? How do we see, what's going to happen 5 years from now?
I mean, okay, I'll just maybe declutter a few things. So first, there is a lot of buzzwords: green finance, sustainable, social, bonds, loans. So, first thing is, so at the smallest part is what you say climate finance. So banks funding sectors which are positive for the climate. So it's called mitigation, industries which help reduce the amount of carbon emitted in the atmosphere. So you have renewables or solar power plants. All this is example of mitigation financing. So till now, traditionally, climate finance or green finance has been focused on mitigation. The moment you think of climate finance, you think of solar. But now there is increasing focus on the second part, something called as adaptation financing. There is now enough awareness that come what may, there is going to be some impact of climate change in the times to come. So how do you support companies to navigate that impact? So it could be, for example, you may have a power transmission cable. Now with climate change, there is a risk that the thickness of the cable is not enough. So you might have a project to increase the thickness of a cable. You might have a factory near, as I said, the coastal areas. So how do you protect it from increasing water levels? So there is going to be increasing focus of banks, and because there is a huge amount of investment required in climate adaptation. So that is one area which will go. The other area is green. So green is a kind of above the climate, which includes climate and also areas like biodiversity protection, coral protection, that area also. So there's a large gamut of green finance. And the big superset of all this is what you say sustainable finance. So it includes climate, green, and aspects around social. So social again is a very broad theme. It could include responsible banking, so inclusive banking, banking to the unorganized sector or the people who can't access, industries, SMEs who can't access banking easily. That is a part of the social construct. That is a part of sustainable banking. Now, I might have said this is a definition from maybe one perspective. What defines this is what is called taxonomy. You might have heard of this term taxonomy. It is nothing but definition of these things which might be different. So the standards everywhere are European taxonomy, where they define what is green, what is climate, what is sustainable, what is not sustainable, what is not green. So every country needs to, so those are considered to be standards, but every country, every organization, so if you look at any issuer of a green bond, you would see a sustainable green bond framework which says what does the organization mean by a green bond, what is not included, how does the organization monitor, report. So that's part of the framework. So in the short term, coming back to your question, I see a lot of evolution around taxonomy. So UAE countries would come up with their own taxonomies because they have to tweak to the social and the context, local context. Organizations will start coming up with their green bond, sustainable bond frameworks. That you will see more and more companies and banks coming up with their ESG report. That's in the short term. Medium term and long term, I come back to my original point. Organizations have to rise beyond this, and even banks look at this as an opportunity, because as I meet clients, there are umpteen number of times clients tell us, banks don't come and talk to me about this. There are SMEs. People think SMEs may not be aware of ESG, but they may not be doing something thinking it's ESG. For example, I met a customer who wanted funding for putting up a solar power plant in his office. And he didn't even have an idea this is ESG. He did it because his buyer was asking him about his emissions, he was trying to control. So there's multiple pressure points coming on everybody. People may not think this is ESG, but there is a genuine requirement. So in the longer term, not only banks, any industry which fails to notice this link between their business and ESG will meet the fate of the companies which we talk when we talk of technology, who kind of bit the dust. So that's my submission.
Thank you so much. I'm aware we're running out of time, and I've taken nearly 8 minutes of your time. So I'll stop here with my last question. I'm not going to ask it, and just go to the floor for any questions that you might have.
Thank you very much, Kamal. On the app or coming in online in the chat, there's 2 comments. Very diverse panel, very, very interesting. It brought it down to a very understandable level what ESG is all about. So that's a great achievement. So thank you very much. So any particular question in the audience you would like to put to our panel right now? Oh, hang on. I'll hand you the mic and this, yeah.
Any standards like ISO are being set for this sustainability throughout the world?
Shall I leave it to anyone from the panel? Yeah.
What was the question again?
Is there any standards being set in the world, such as similar to the ISO for sustainability or ESG?
You know, it depends on the industry. Nowadays, every other day, every year, we are seeing new ISOs coming up, very sophisticated, very advanced, and targeting different aspects. And it becomes, you know, like when you are studying, you say, okay, I'm qualified, I have this. This is the same thing. Entities line up the ISOs that they have taken it, or other standards and specifications. As I said, you know, ESG should not be just taken as a trend. It is part and parcel of everything that you are doing. And I don't want ESG to overturn and overcome and remove the corporate social responsibility. Corporate social responsibility is a bigger picture. ESG is a part of it, is a tool of it, you know. And it shouldn't be just directed or led by big multinationals and corporations that want to change the perspectives around the world so that there's less pressure on them. If you are practicing corporate social responsibility, if you are very much advanced into your ISO 14001, 9002, or SAS and the others, you are doing well, you know, so you must be doing this, and you just look at the angles of what is the requirement of your social angle of it, your environmental, as well as how is adding value to your mainline corporate, you know, financial outcome of it.
Wonderful, wonderful answer. Any final question? Or are we all good? I think, could we give the panel a round of applause? That was really a wonderful, wonderful, absolutely amazing session. So, with that, my dear friends, just to let you know, so you can plan, we'll be going for a coffee break in about less than 10 minutes. And before we go to the coffee break, I'll be making 1 or 2 announcements. But the big announcement I have to give right now is the winner of the ICC Trade Technology Competition, Trade Tech Transformation. And the lead judge with the judges, and Anna Kabdaradla should be here. I hope she's here somewhere. Oh, you're over here. Please, could you bring us the judgment? And Olyena, you're a very reliable lawyer, or so they tell me, so you need to come on stage, because you got to have someone we can rely on who is going to deal with this prize here. And I come over this side, because I might want you to just say a few words, if you don't mind. And the others are here. Right, okay. So the moment we have all been waiting for, who is the winner of the Trade Tech Competition 2023? Okay, so have you got an answer? Oh, we have an answer, and your job is to open it and to call out who is the winner. Okay, let's try. Yeah.
Maybe the envelope is step-by-step opening. Interesting. Let's try, yeah, let's see. I hope it's me, but okay, let's try. It's very, very interesting. We have 2 winners, not only 1. Something new. Okay, first one. Okay, first. China Systems and Trade Assets.
Oh, wow, absolutely amazing. So So we have two winners, and this is causing me a big problem. So guys, just for the winners come on stage, I only have one winner trophy at the moment, and the rest are kind of challengers. But you trust me, I will organize a You trust me? No, you don't trust me, Pavel. Okay, but anyway, could we have all our competitors please come on stage, please? Yep, because our judge is going to make a few words. I think as Troy here as well, and I think you can take a seat to get comfortable. So get comfortable, and I'll bring you over here to the podium, and maybe you can. Or will I give you this microphone? So I'm just going to get Anna to make just a few words of the consolidated views of the judges. And we agreed it would be really, really short, because when I stand beside you, I feel really, really short. So that's why it should be short. Okay, so there you go.
So I would like to hand over the microphone back to you, just to remind us the
task, okay, sorry. The task in hand, as explained earlier on, was to identify the project, our company, our organization, and it was trade transformation. So basically now, or right now, or in the future, can provide the technology that will really transform trade in the eyes of the judges. And that's why the competition was called Show Us What You Got. So it was, what have you got that's going to actually make a difference, and make a difference to global trade pretty much right now. Is that okay? Yeah.
Thank you. Why I asked Wayne to repeat this, because we asked as a judges to repeat the task to us as well. The task was very difficult, and I think from our point of view, the judges, we were more nervous than you while presenting, while making the decision, and it took us an hour and a half approximately to make the decision. A lot of arguments, a lot of which Vin very much likes. I have to read it out because I'm very nervous. I usually am not nervous when I'm making speeches, but this time it's a consolidated opinion. So it was extremely difficult. As I mentioned, our opinions split at some time. During the decision-making process, as Vin said, we were focused on the main task, so the global trade benefits in a real time. And once again, besides the important benefits that all four of you bring to the society and to the global trade, we thought that you complement one another very much. And it was very diversified solutions, which are all very much needed and also presented and prepared, and the solutions built up very wisely. So I know that I have to be short, and I promise to be short, maximum 3 minutes. So Impel, I want to share the opinions as well, because the decision, again, was not easy to make. Honestly, we would not be surprised, and honestly, all three of us said that if Impel changes the trade and payment world within some time, and the games of the rule sometimes, but we don't see it in a real time coming very soon. So basically, that's where we had to step back. But we wish you success, and we really will be following you. All three of us at least, and I'm sure that the audience and the online auditorium as well. Money move, brilliant idea. A brilliant idea, and we've heard many times the gap is starting from 1 to 3 trillion, which is extremely big, and we think that your role in financial inclusion of the SMEs is critical and very important. But again, coming back to our homework, being global player, currently your focus is still, and up to some time, we think that because of the support of the government you have, and it's critical in this type of a project, it's still more localized. But it's very critical, and I really hope that many countries and many governments will be copying, not coping, but copying from your example, and we'll be watching you closely as well. Wonderful. So, again, coming to the global trade, China systems. So, of course, there was an influence of the history and the track record, which most of us probably in trade finance know China systems as a very long-lasting, very reliable partner to many countries and many banks and many corporates as well. And also very, I would say, we always and vividly see, and I've been watching also, and the colleagues and the judges were sharing the same, that the China system stands out as a leading example in very tangible digital solutions and very practical digital solutions. And I think that despite the fact that the product itself showed to us today, or demonstrated to us today, it's not very, I'll quote you, sexy again, product. It's still a low friction, which is important, because we do hope that with this product, you will be copying the same to the more frequent or used in the products that are more acknowledged by the trade finance globally. And it's very important to showcase. The only thing we were struggling with, that you still do not have a showcase, which we hope to see, and we kindly ask you to share the first example whenever available. But it's again, it's a pioneering. It's a very brave step forward. It's a very good step for the regulators as well. And in certain countries, I do personally believe it can be done, at least within certain countries where e-bills of lading are already allowed, so, or permitted. So good luck with that, and congratulations. Because it's again allowing global trade to move faster. And we've been told and taught by Vin that speed and being short in terms of a time is very important. Trade assets. What can I say? It was said already that we've heard you last year. I was personally also amongst the people who were listening you very attentively past year. And I also would like to say that the results you've shown to us was surprising for me too. The number of transactions, the number of onboarded institutions are very impressive. You have the opportunity, first of all, and also a responsibility of creating a, how is it called, Tyndall? Networking, financial institution networking platform, which is very much needed now. So it's, from my standpoint, it's one of the financial inclusion, parts of the financial inclusion for the financial institutions, because besides very interesting dialogues, many institutions coming on this type of events as well is because of the networking, because the business is usually done, and it will continue, similar to trade, be done based on the trust and the networking. So you have a big responsibility. And in addition to the last year, which we very much liked, was that you have explored the new ideas, probably, and then you have added or decided to add MDBs to your pool, and as well as insurers, which is very important, very critical part there. And I am sure that these organizations will play a very important role in developing. So you have a very big responsibility as well, and we will be watching you very closely. And we think that all four of you, at some point, are the winners of the technology.
So could you hand me that board there, just there, that one there? No, the board, yeah, that's it. And just a few announcements, because we're going to go for a coffee break. And when you come back after the coffee break, we have a really something very, very special. Something very special that's brought to you by the Institute of Chartered Shipbrokers. And we're going to have, when we come back at 4 o'clock, I know we're 30 minutes behind schedule, but I promise you this is really, really worth listening to. And I'm just giving you the brief introduction. Institute of Chartered Shipbrokers will give the full introduction after the break, with the Captain Jitendra Misra Memorial Lecture from the Institute of Chartered Shipbrokers, Shipping Challenges in Turbulent Times. And indeed, these are turbulent times. Fraud detection and risk mitigation. We have a really top-class speaker, Michael Howlett, Director of the International Maritime Bureau, IMB. He's also CEO of Commercial Crime Services, CEO of the International Chamber of Commerce. That will be after our break. But before you go, sit just for a moment. We will also, when we finish this evening, we will be having the Global Trade Facilitation Prize draw. So we have 3 wonderful prizes of high-end audio systems, and I'll explain more about it when we are going to have the prize draw. But I have to give you a hint. For the rest of the day, you have to listen for numbers, because at the very end of the day, I will ask you a question, and the answer is going to be a number, and I have 4 prizes, okay? And whoever shouts out a number each time will win one of the high-end audio systems. So now to the tickets, okay? Tomorrow, the last panel was all about green, as you know, sustainability and green. And I hope you noticed that my jacket is green, okay? So because tomorrow is the biggest day of the year, tomorrow is St. Patrick's Day. This is a really big social activity for the Irish community and the big community of 200 nations here. 200 nationalities in Dubai. 200 is a good number, okay? And as we heard from Nadia yesterday, this beautiful place we live in has seven emirates. And then I was giving you the history of the ICC, and we saw it was formed just over 100 years ago in 1919. And we discussed a few other numbers, but the answers are going to be a number. But now to the Museum of the Future. Some of you are flying this evening. Some of you are actually going to desert tomorrow. And then others of you are going shopping, I guess. We have done our best, and what we've got for you is, not for everyone in the audience, it depends on how lucky you are. So we have 100 tickets for the Museum of the Future, okay? Now the 100 tickets, because they are like gold dust to get, the 100 tickets only allow you in the door from 10:30, and it takes about an hour or 90 minutes to do it. So if you're not available at 10:30, or to be at the door at 10, not exactly 10:30, but pretty much around 10:30, if you're busy in the morning and you're going to the desert, there's no point in you getting a ticket, you know, there's no point. So what's going to happen is at the break is happening now, at the registration downstairs, we have 100 tickets, but don't go down unless you're really going to be there at 10:30 tomorrow. But to get there, of course, I have everything organized. At 9:30 tomorrow, there'll be a bus leaving the Sheraton where we had our reception and you had your lunches. 9:30 in the morning. The bus will then go to the Bandar Rotana, because a lot of you are staying there as well, and it will be there. There'll be a bus at 9:45, and it moves from there to the Flora Creek, because a lot of you are there, and at 10 o'clock, and it will take you to the Museum of the Future. And then you decide how long you kind of stay there, but it's about an hour and a half, and then you find your own way afterwards. Okay, I think that's fair enough. Finally, and I'm sorry for keeping you so long, but I've good news. We are all invited. Yes, and your mother can come, and your daughter and your sister-in-law are also welcome to come because they're visiting Dubai, okay? So you can bring, I know you said the family, but then if the Irish are here, the families are so big we'll be overrun, okay? So the dinner tonight is in the Park Hyatt, which is very nearby, right? Very, very nearby, a beautiful hotel. The dinner is starting at 7, but there will be a coach leaving outside Dubai Chamber here, just in case you want to come back and get the coach, at 6:30. There'll be another coach going at 6:45. They'll bring you to the dinner. And again, some people will stay 2 hours, some will stay 3. These Irish guys will stay all night, you know. So you find your own way home after. But even if you miss the coach, it's about $5 or €5 to get a taxi to the Park Hyatt. Park Hyatt at 7 o'clock. So with that, my dear friends, coffee break, and we will plan to start 4 o'clock. It gives us about 20 minutes. And those who can be there, 10:30 tomorrow, Museum of the Future, please go and pick 1 ticket per 1 person, okay? Only 1 ticket per 1 person who appears. Habib. Oh, and just to mention that our people from many countries, we have online participants from 62 countries at last count. For you, the session closes. I hope you enjoyed the event, and we'll see you next year for GTFS 2024. Okay? Thank you very much, Nadia. Thank you. We're not finished. Come back at 4 o'clock, you guys. Okay.